Hello everyone, I hope you all are good and doing well. So if you are appearing for your May-June 2026 examination, then this session is important for you all. So what we are doing in this session, what you will get in this session, that is all about the MCQs of Macmillan book. So in this session, we are not doing only the questions of Macmillan, but we are also revising the concepts according to those questions. So it's a high request from you all that kindly watch the entire session. If you found any kind of confusion, problem in any of the question, then you can drop your genuine response in the comment section box. I'll address them quickly. And moreover, subscribe to our YouTube channel, like the video if you feel it is beneficial to you. So let's get started without wasting any time. So don't skip the entire session. Kindly watch the entire session. So let's get started. Now, so in statistics, okay, so first let's discuss some of the basics of the statistics. Then it will be more clear to you to deal with the formulas. So in statistics, we have frequency distribution. Okay, what is frequency? First, let's understand. Frequency means the number of occurrence of any value. So like if I say value number 5, so how many times the number 5 is occurring? That is what? That is your frequency. If number 5 is occurring 10 times, so it becomes your frequency. So number of occurrence of the value is termed as frequency. Now in frequency distribution, we have different elements over here. First is class limit or class interval. So class limit is what? Class interval. It is formed within two values. One is the lower limit. Okay, so lower limit is also known as lower value, and the upper value is also known as upper class limit of the class interval. So class limit is formed with the help of two values, the lower limit and upper limit. All right. Suppose 10 to 20 is there. Now in this, what is the lower limit? So lower limit is the thing which is on the left hand side, that is 10, and upper limit is what? That is 20. Next is class length or class width. So class length and width means what is the difference between the class interval. So if I say 10 to 20, so what is the difference between these two? 20 minus 10 is how much? 10 means the class width and class length is what? That is 10. So the difference between class upper and lower class limit is known as class width. So class width is equals to upper class interval minus lower class interval. Next is mid value or class mark. So how to find the mid value? So if in any wherever you will see the mid value or midpoint, just divide it by 2. So how to find the mid value? So that is lower class limit plus upper class limit divided by 2. Suppose if I want to find the mid value of 10 to 20. So what I will do? 10 plus 20 divided by 2. So 30 by 2 is equal to 50. So this is the example just to make you more clear. So class interval is given 0 to 10, 10 to 20, 20 to 30, 30 to 40. Now what is the frequency? So between 0 to 10, how many students have scored? Between 0 to 10, that is 5. 10 to 28, 20 to 30, 12, 30 to 46. Now if you will total all this, it becomes your total frequency. Alright, so 12 plus 8, that is 20, then 26 plus 5, 31. Lower class limit is 0, 10, 20, 30. Upper is 10, 20, 30, 40. Okay, how to find the class width? So 10 minus 0 becomes 10. 20 minus 10 becomes 10. Again 10, 10. So we have equal difference in class interval. The equal difference is there. How to find the mid value? Just add upper class limit, lower class limit plus upper class limit divided by 2. So you will get 5. So suppose 10 plus 20 equals to 30 divided by 2, 15. 20 plus 30 equal to 50 divided by 2, 25. 40 plus 30 equals to 70 divided by 2, 35. This is mid value or class mark. So you should know the difference between class interval, class width, class mark. I hope this is clear to you. Okay, so I'm going a bit fast because we have a lot to complete. Now, next is types of class intervals. So there are basically two types of class intervals. One is exclusive and one is inclusive. Alright, so what is exclusive and what is inclusive? Now, exclusive means something is excluded. Yes. And inclusive means something is included. So exclusive type intervals are what here? The upper limit of the classes are excluded and they are kept in the next class interval. Means if I say 20 to 30, it means what? That the upper limit of the classes. Upper limit of the class is what? 30. this upper limit of the class is excluded. It is not counted over here. It will be counted in the next class interval, in the next lower limit of class interval. That is 30. So see, when I ask that in between 20 to 30, 30 and 30 to 40, 30 comes in which class interval? So you will say 30 to 30 comes under 30 to 40. Yes. So this is the meaning of exclusive. So here the upper limit of the class, this is excluded and it is put in the next class limit. So it is assumed that it will be counted in the next class limit of lower class interval. So lower limit is included, all right, and upper limit is not included. This is what? This is the upper limit and this is lower limit. Okay, so suppose this upper limit is not included, 10 is counted over here. Then 20 upper limit is not included, it is counted in the lower limit of next class interval. Similarly, 30, that is upper limit, it is not counted, it is not included in this, it will be included in the lower class limit. So this is the type of exclusive type. Okay, so upper limit goes to the next class interval. Now, next is inclusive type. Inclusive type means the lower and upper both are having the data. Both are having data in their class limits. So here both lower and upper class limits are included in both the class intervals. So if you will see 0 to 4, okay, if I say that 4 comes in which class interval? So you will say 0 to 4. Okay, 9 comes in which class interval? You will say 5 to 9. 10 comes in which class interval? You will say 10 to 40. So here the upper and lower, both the limits are included in class interval. So this is known as inclusive. When it is included in both the class interval, it is known as inclusive. When it is excluded from upper limit and kept in the lower limit, it is known as exclusive class interval. Right? Now, next is class boundaries. So how to find the class boundaries? So class boundaries means when the inclusive class is converted into exclusive class. This is known as, and a new class interval is formed. When inclusive is converted into exclusive, a new class interval or class limit is formed and it is known as class boundaries. Suppose the classes are 5 to 9, 10 to 14, then 15 to 19, 20 to 24. Suppose these are the classes. Now, it needs to be converted to exclusive type of classes using the formula. Alright, exclusive type of classes means upper class limit is not counted and the number that is counted where in the lower class limit of next class interval. That is what the exclusive is. So what you will do, there's a formula. Okay, so if you have to find the new class interval, how to find the, because see, lower and upper, so you have to find the new lower class interval and new upper class interval. Yes, so new upper class interval, how to find? So old class limit, what is the old upper class limit? Okay, this is the lower class limit, this is the upper class limit. So old upper class limit is what? That is 9 plus 10 minus 9 divide by 2. So 9 plus 10 minus 9 is what? 1 divide by 2. 1 by 2 is what? 1 by 2 is 0.5. 9 plus 0.5 is 9.5. So this is new upper class interval. So upper class interval is this. So it means it is not 9, it is 9.5. Now let's find the new lower class interval. So lower class interval is, okay, 5. So new lower class interval, how to find? Old lower class interval is what? Old lower class interval is 5. Now, here we are doing addition for finding the new upper class limit. For finding the new lower class limit, we will deduct. We will do the sign minus over here. Minus 10 minus 9 divided by 2. 10 minus 9 is again 1 by 2. 1 by 2 means 0.5. So 5 minus 0.5 is 4.5. So henceforth, what we have concluded, that new lower class limit is 4.5. Now your class limit would be, new class limit will be 4.5 to 9.5. Then 9.5, okay, to 14.5. So this is what? This is a new class limit. Okay, so this entire process is known as class boundaries. So in this way, we find the class boundaries. So this is inclusive class 5 to 9, 10 to 14, 15 to 19. Now how to convert it into exclusive? So similarly, okay, we will deduct from lower class limit and we will add, okay, 10 minus 9 upon 2. The then next class limit, whatever the value is, 10 minus 9 divided by 2. So 9 plus 0.5 and here 5 minus 0.5. So 4.5, 9 to 5. Similarly, okay, 10 minus 0.5 is 9.5. Then 14 plus 15 minus 14. 15 minus 14 divided by 2. So it is what? 1 by 2, 0.5. So 14 plus 0.5, 14.5. All right. I hope it is clear what is inclusive, what is exclusive. Okay, and one request from you all, those who are watching right now, and if they have not yet subscribed to the channel, kindly subscribe the YouTube channel, English Medium YouTube channel, that is JIB CIB English Medium. And if you feel sessions are helpful to you, watch entire session. After watching the session, if you feel it is helpful to you, then you can like the session and share it with others as well. All right. Next topic is that is relative frequency. Now, where one question will be there either from relative frequency or from percentage frequency. One question will be there. Relative frequency, what is the formula? Frequency by total frequency. Frequency means the number of times the value is occurring. That is frequency. Percentage frequency is frequency upon total frequency into 100. Suppose the score range is given 60 to 69, 70 to 79, 80 to 89, 90 to 100. This is what? This is frequency. Now, if I say what is the relative frequency of 70 to 79, how to find? What is the frequency? Frequency given is 10 upon total frequency. What is the total frequency? 10 plus 5, 15, 7 and 8, 15 means 30. 10 divided by 30. This is the relative frequency. If I need to find the percentage, so I will simply multiply it by 100 to find the percentage frequency. All right. So score range is given frequency. What is the relative frequency? So this is entire 30. So 5 by 30, 10 by 30, 8 by 30, 7 by 30. And multiply it by 100. So 16.7%, 33.3%. This is relative frequency. Then frequency density. So frequency density is what? It basically it helps to find out the value, how much frequency is present in 1 unit of class. See, this is useful only in the case when the class width is not equal. Suppose the class width is 10 to 20, then 20 to 25, 25 to 45, 45 to 80, 80 to 90. So as you can see over here, the class width are not equal. There's a gap of 10. There's a gap of 5. There's a gap of 20. There's a gap of 35. So class width is not equal. That is why we have to find the frequency density. So for this, there is one formula, that is class frequency divided by width of class. So whatever the width of the class is, suppose the width of the class is 10. Here, what is the width of the class? 5. What is the width of the class? 20. Width means the difference of the class interval. So in this way, the frequency density has to be found. Suppose class interval is 0 to 10, 10 to 20, 20 to 40. Frequency is given. First, find the class width. What is the class width over here? 10. Again 10 and here 20. So frequency is what? That is frequency density is what? Frequency upon class width. So frequency is what? 5 upon class width is 10. Again frequency is 10 by 10 and 20 by 20. So this is frequency density. All right, done. Now, next is continuous frequency distribution. Okay, there are two types of frequency distribution. One is discrete and one is continuous. Okay, discrete means discrete is also known as individual. When single value is given, the whole numbers are given like 1, 2, 3, 4, 5. And continuous frequency distribution is when the values are given either in decimal or in continuous series like 0 to 10, 10 to 20, 20 to 30. Okay, so this is the question. Variable takes values which are expressed in class interval with certain limits are known as continuous. So this is what? This is the class interval. So marks obtained by 20 students in an exam for 50 marks are given below. Okay, 20 students are there and every student has scored marks under 50. Okay, so 50 marks are there. Now we have to convert the data into continuous frequency distribution. How to convert this data into continuous frequency? So if you will see this question, okay, not less than 18 marks the candidate is scoring. Okay, not less than 18 and not maximum 49 marks the candidate has scored. Less number is 18 and maximum number is 49. So can I make a continuous series like this? 15 to 20, 20 to 25, 25 to 30, 30 to 35, 35 to 40, 40 to 45, 45 to 50. Yes. So how many students have scored from 50 to 20 marks? 118 is there. All right. Only one student has scored from 15 to 20 marks. One. Now between 20 to 25, how many students have scored? 23 is there. Then 24 is there. And okay, only two students have scored between 20 to 25 marks. So like 15 to 21, so frequency comes 1, then 20 to 25, 2, then similarly 25 to 30, if we will see, the 7 are there, similar 4, 1, 3, 2. So this entire thing is what? This particular thing is known as continuous frequency distribution. When converting individual series into the continuous frequency distribution, so that we can make the class intervals and class limit. All right, now one question is given to you. Again, the marks of 50 students are there. We have to prepare cumulative frequency distribution of both the type. Both the type means, see, cumulative frequency distribution this is found either less than cumulative frequency or more than cumulative frequency. If we have to find the less than cumulative frequency, so what we do in this case, we do this zigzag method. Okay, so zigzag method is applied over here in less than cumulative frequency. And if more than cumulative frequency, we have to find more than cumulative. Okay, cumulative frequency means what? When you are accumulating all the frequency values, that is known as cumulative. So in this, we start from bottom to top. It goes from top to bottom. And it goes from bottom to top. So we start from here, bottom to top like this. It starts from here. And this starts from top to down. That is in zigzag manner. So 0 to 10 marks is there, 10 to 20, 20 to 30, 30 to 40, 40 to 50. All right. Now, first find the cumulative frequency that is less than cumulative frequency. So I told you that in less than we do zigzag. Okay. Like 7 is there. 7. Then next is what? 7. Next is 11. Whatever value comes plus 19. Whatever value comes plus 7. Whatever value comes plus 6. And is equal to 20. So this will be 6. See, 7 plus 11, 18 plus 19, 37 plus 7, 44, 44 plus 6, 50. Okay, so this is less than cumulative frequency. Now in more than cumulative frequency, I told you that we start from bottom to top. Okay, in bottom, if you will see, what is the frequency that is given in bottom? 6. So we will write 6. Then 6 plus 7 comes 13. 13 plus what value is given? 13 plus 19. Then whatever value comes plus 11. Whatever value comes plus 7. So we will start from bottom to top. So that is 50. All right. And relative frequency is what? That is frequency upon total frequency. So this is the frequency, total is 50. So 7 by 50, 11 by 50, 19 by 50, so on. Okay, so this was your unit number 1, the basics of unit number 1. Now we will be starting unit number 2, that is sampling. All right, so sampling is what? Why we do sampling? Sampling, we see, it is not easy to collect the data from the entire population. So that is why we take a part of the population, and when taking a part of the population, that is known as sampling. Suppose you have to find the how many families how many families are watching IPL. Okay, how many families are watching IPL? Okay, IPL is going on. So if you want to see, if you want to know how many families are watching IPL, now you are collecting the population from entire India. So it becomes difficult for you to collect the data. So what you are doing, you are collecting. Okay, let's take it any particular state. Let's take it UP. If you want to know how many families are watching IPL in the state of UP, it becomes quite difficult to collect the data from UP. So what you will do, you will pick a part of the population, and that part of the population is known as sample. So sample should be such that should be the representative of the population. It should be the all right. It should be the subset of the population. So if you are collecting a proper sample, then only you can collect the proper data. If you are collecting a very small part of the population, a very small part you are collecting. So you will be having the problem of sampling error. Then there are high chance that sampling error arises. Okay, so why sampling error arises when from that population, suppose finite population is there, 10,000. Now from this 10,000 population, if you are picking only 50 people, or if you are picking only 500 people, so it will not give you the correct data. So that is why it is important to pick the to pick a sample from the population, but that sample should match your representative. It should be the representative of the population. It should match the population. All right. So there are important notations and symbols that are used in population. So collection of all the items like population mean, population median, so it is known as parameters. And collection of all the population, all the part of the population, that is known as statistics. So size of the population is represented by big N. Here the size of the population. Here the size of the sample, not population. It is represented by small n. Mean represented by mu, and sample of mean is represented by x bar. Standard deviation is represented by this, and standard deviation is represented by this symbol. Okay, symbol is this upon x bar. This is what the notation of population and sample. Now, okay, we just now we have talked about the population, when the population is finite or when the population is infinite. Suppose if population is finite. Okay, what is the meaning of finite and infinite population? Can anyone tell me finite and infinite? Finite population means what? That is the countable population. Countable means population with limited countable number of elements. That is finite population. It is fixed. It is known. It can be counted completely. And infinite means the population with unlimited, uncountable number of elements. Like for example, a finite population, suppose students in class. You can count the students. Employees in a company. You can count the number of employees. But what is infinite population? Like number of stars in the sky. So this is what? This is uncountable. You cannot count it. So countable is known as finite, and uncountable is known as infinite. All right. Now, if population is finite, so what we do sampling with replacement. Okay, SWR. If population is infinite, if population is infinite, so sampling without replacement is used. Without replacement. All right, clear. If population is finite, okay, sampling. So sorry, sampling without replacement is used when population is finite, and if population is infinite, sampling with replacement. This is without, and this is with replacement. So this is what when population is finite means population is countable. You can count the population, and infinite when the population is uncountable. All right. Okay. So what is the formula for this when the when population is infinite, sampling with a replacement? So what is the formula? So that is standard deviation upon under root n. This is what? This is the formula when population is infinite. So if you have any doubt, you can ask me. All right. Meanwhile, in the comment section box. And if population is finite, means you can count the population. So we do sampling without a replacement. So later on, okay, we will be seeing with replacement and without a replacement. Okay. So what is the formula for this if population is finite? So we use this particular formula. Standard deviation upon under root n. Okay. Then big N minus small n, big N minus 1. Now we have done what is the big N? Big N represents the population and small n represents the sample. So size of the sample represented by small n and size of the population is represented by big N. That is why these are important, because everywhere it is not given that the size of the population is given. It will be written simply n. It will be written simply mu. It will be written simply x bar. So you need to learn that what is the sample, what is the symbol of sample and population. All right, now. So in order to find the standard error of the mean when the population is infinite, population is uncountable, you don't know how much exact the population is. So in this case, we will use this particular formula for finding standard error. So standard error x bar is equal to standard error upon under root small n, the size of the sample. Okay, now see this z is what? Z. It is basically found when the sample size is given at it is at least 30, means at least 30 means it can be more than 30, but it should not be less than 30. When the size of the sample is given, if the size of the sample is 30, 35, 40, at least 30, not less than that, then in that case we will use this formula. So x bar minus mu divided by standard deviation. Okay, so this is what? This is the formula. This is the all the functions, all the symbols are of sample and population. Now, this is used, see, if you will, okay, forget this one. If you will see this one, this is used in the case of finite population. What is the formula for finding finite population? So, under root big N minus small n, big N minus 1. And simply this is the formula. See, this is the above formula. Okay, the standard error formula. So, standard deviation upon under root n into under root n minus small n upon n minus 1. So, these two formulas are combined, and the third formula is generated when the size of the population, when the population is what? When the population is finite. It is mentioned that you have to find the data from the population 10,000 people, from 50,000 people. So the numbers are described. It means the finite population is. Okay, so this is the way to find the standard error. The formula of standard error when the population is finite and when the population is infinite or the sample size is at least 30. Okay, now next chapter is what? That is all about your mean, median, mode. That is central tendency. So dispersion, kurtosis, correlation, regression, this we will be doing in our next chapter. So today we will be doing till mean, median and mode. Now what is the mean? Mean means the average value. Just a minute. Yes. So mean means what? The average value. So mathematically derived values using all data. So if I say that 2, 3, 4, 5, 7, 8. So it means 2 plus 3 plus 4 plus 5 plus 7 plus 8 divided by 6. That is what? That is the average. Median means what? Median means finding the middle value. Now what is the middle value in this case? See, this is suppose middle value 1, 3, 5, 4, 2. So middle value is what? That is 5. So this first you have to arrange it in the ascending order, or you have to arrange it in the descending order. So if I say 1, 3, 5, 4, 2, and if I say the 5 is the median, so this is completely wrong. So first you have to arrange the entire data either in ascending or in descending. So how you will arrange 1, 2, 3, 4, 5. Now what is the median? 3 is the median. And mode is what? Mode is the value that is occurring several times. Value that occurs several times, that is mode. Suppose to 3, 4, 4, 5, 8, 7, 6, 1, 2, 3. So again, this is the data. First, you have to arrange it in the ascending or descending order. Now, okay, whatever value is repeating very much. So like 4 is repeating 2 times. Okay. Number 2 is repeating 2 times. So in this particular data, 3 is also repeating 2 times. So in this particular data, we get 3 mode. That is 2, 3, and 4. So it is more than one mode is the bi model is there. Okay, one mode uni model is there. So it can be uni model or multi model. Multi model means more than one. Uni model means one. 2, 3, 4, 5, 2, 1, 6. So what is mode in this case? Because 2 is repeating, so 2 is the mode. Okay, so mean, there are three different types of mean: arithmetic mean, geometric mean, harmonic mean. So arithmetic mean is what? It is simple, the average of all the numbers. So it is simple to compute. Now, why we find where we use average arithmetic mean? So to find the test score, general averages. Where geometric mean is used, it is the uh, multiplication form. It is we multiply several ratios. It is used in index number for finding the value of the stock market scores, portfolio returns, and harmonic mean is used in for finding the average speed of the car, average speed of any vehicle, work per hour. So ratio of two variables with different measures. All right, so let's start arithmetic mean. So it is simple to calculate. It is a used measure of mean, average. It simply involves taking sum of group of numbers and then dividing by the sum of the numbers used in the series. Okay, so what is the formula of arithmetic mean of ungrouped data? Ungrouped data means when the data is not grouped properly. Suppose value is given 2, 3, 4, 5, 7, 10. So what you will do? 2 plus 3 plus 4 plus 5 plus 7 plus 10 divided by 3, 4, 5, 6. So divided by n is what? N is the number of values. That is total. Total, how many numbers are there? So 6 numbers are there. This is for ungrouped data. So we say x by n. What is the arithmetic mean formula? That is, okay, summation of x upon n. What is the formula of grouped data? Summation fx frequency into x upon n. That is grouped data. So these are the two types of formulas, the grouped data and ungrouped data. All right, suppose, okay, f and x are given. X is given how much? 1, 2, 3, 4, 5, 6, 7, 8. All right, f is given how much? 5, 6, 5, 10, 8, 4, 3, 2. Now, what is the formula for ungrouped data? That is summation fx upon m. So first we have to find the fx. So 1 into 5, 5, 6 into 2, 12. Then 3 into 5, 15, 10 into 4, 40, 8 5s are 40. So this is how the values are given. First to find the fx. Okay, first to find the fx, 1 into 5, 2 into 6, 3 into 5. Now, total value of fx is what? If you will add all these values, you will get 173. Total frequency is what? If you will add the total, you will get 43. So summation fx upon, okay, summation f. So that is f, or we can say n. So total is 173 upon 43, that is 4.02. So that is arithmetic mean. Next is what? Next is geometric mean. Geometric mean is what? See, in this geometric mean, what we try to find, whenever we are finding the values, we always do the root of the product. Suppose numbers are given to you 2, 4, 6, 9, 10, 12. Okay, so how to find the geometric mean? So under root, how many numbers are there? 1, 2, 3, 4, 5, 6. Under root 6. 2 into 4 into 6 into 9 into 10 into 12. So this is what you have to do. You have to find the geometric mean. So it is the average value or mean. See, again, it is a part of mean. So in this, we always do the average. We always find the mean of the values, mean of the numbers, or the set of numbers by taking the root of the product. So if number of numbers are given 10, so we will under root 10. If the numbers are given 20, we will under root 20. The geometric mean is, it is always less than the arithmetic mean, and it is calculated only for positive values. So can I say that arithmetic mean is greater than geometric mean from this statement? Yes, it is always less than. So arithmetic mean is greater than geometric mean. So n is what? That is the number of items, or and this is what? This is the x value. So like 10 into 24 into 15 into 32 under root 4. So what is the value coming? 18.423. So from the calculator, you can calculate this. You have to do it 4 times the under root. Then you will get the value this. Okay, next is harmonic mean. So harmonic mean is, it is just the opposite of the arithmetic mean. Okay, so in arithmetic mean, we do, okay, summation x by n, yeah, summation fx by n. Okay, we have to do n summation x. So this is what, this is harmonic mean. It is the reciprocal of the arithmetic mean of the reciprocal of the individual observation. So all of the individual observation will be that also reciprocal is there. So it is used in ratios, rate, different units like kilometer per hour, price per unit, work per hour, and speed per hour. So for grouped data, it is n upon, now reciprocal of summation x upon, summation x is what? X upon 1. Now the reciprocal of this also. So 1 upon summation x. Okay, so summation fx upon n by 1. So n upon, okay, summation f by x. This is what? This is for grouped data. Okay, so this is the common data. Let's find the arithmetic mean, geometric mean, harmonic mean of all the individual series. So individual series is 2, 4, and 8. How to find? Summation x by n. Mean is what? Summation x by n. So 2 plus 4 plus 8 divided by 3, 4.67. Geometric mean is under root 2 into 4 into 8, 3. So 4 2 is 8, 8 is the 64, under root 3. So 4 answer. All right. Then, okay, harmonic mean, it is the reciprocal of the individual observation also. So how many observation are there? Total 3 observation are there. Values 2 by 1. So we will write 1 upon 2 plus 4 up 4. 4 means what? 4 upon 1. So 1 upon 4 plus 1 upon 8. So 3.43 is the answer. This is for individual series. Now for discrete series where 2 values are given, f and x. So first summation fx is required in arithmetic mean. Summation fx by f. So fx 2 into 1, 2, 4 into 1, 4, 8 into 1, 8. So I have written the simple example so that it becomes easy for you to understand. Otherwise, it will take a lot of time to calculate one single question. Just for the explanation, that is why I have taken the small numbers. 2 plus 4 plus 8 divided by 3, 4.67. Geometric formula is what? That is x upon f. X is what? 2. Now, how many times the 2 is coming? Frequency is 1 into 4. How many times 4 is coming? Again 1. How many times 8 is coming? Again 1. Under root 3. So that is geometric mean 4. Under root 3. Under root 64. And 3 times. So it is 64 answer. Now harmonic mean, again sigma f upon 1 by x, reciprocal of the number of observation. So 3, total value 3 is given. Then 1, 2 upon 1 means 1 upon 2, 1 upon 4, 1 upon 8, so 3.4. All right, understood? Any doubt in this? Now, next is what? Next is the median formula. Median means what? That is the middle value. Okay, how to find the middle value? See, there are 2 ways to find when odd series are there or when even series are there. Suppose odd series are there, okay, 2, 3, 5, 9, 2. 1, okay, 5. Okay, these are the series. Now, what we have to do? First, you have to arrange it. Okay, let's take it 1. You have to arrange it in the ascending or descending order. So 1, 2, 3, 5, 9. What is the median? Odd number. 3 is the median. Yes, middle value. Now, if the value is an even, suppose the value is given 1, 2, 3, 8, 10, 12. So these are what? These are the 6 numbers. So what you do? That is, okay, 6 numbers are there. So either you can do 3 plus 8 divide by 2, 11 by 2. That is what? 5.5. Okay, 5.5 means the value will come over here. Or what you can do, n upon 2 plus n by 2 plus 1. So n upon 2, that is the total value 3, 4, 5, 6. 6 by 2 plus 6 by 2 plus 1. So 3 plus 1, 4. That is 7. So it will come in between 3 to 8. This is what? This is the median. All right, understood? So let's do one question. It will be more clear to you. Now, find the median of the daily wages of 10 workers are there from the following data. Okay, 10 workers are there. So first it is important that you have to arrange in ascending order. So how to arrange? You will arrange 8, 9, 11, 14, 15, 17, 18, 20, 22, 25. Okay, now let's find the median because 10 workers are there. So it is the even. Even, what is the formula? Okay, n plus 1 upon 2. N plus 1 upon 2, that is n is how much? Okay, so total values are there 3, 4, 5, 6, 7, 8, 9, 10. Now 3, 4, 5, here it is 5, here it is 5. So n plus 1 by 2, that is what? That is the fifth observation. So 10 plus 1 upon 2 is what? 11 by 2. So 5.5 observation. 5.5 observation means, okay, in between these two 15 and 17. So 5.5 is, so we will take both. We will take 15 also. We will take 17 also. So 15 plus 17 divide by 2. That is what? That is 16. So 16 is what? 16 is the median. This is in the case when the numbers are given in even form. When the number is odd, it is simple to calculate. But the number is in even, so you have to apply this form. All right. Now, next is median of grouped data. Okay, this is for the individual series. This all the data is of individual series. Now, if the grouped data is given, how to calculate? So for this, we have the formula. What is the formula? That is L1. L1 is the lower limit. L1 plus L2 minus L1 upon n by 2 minus cumulative frequency divided by frequency. L1 is the lower limit. L2 is the upper limit. F is the frequency. CF is the cumulative frequency. And N by 2 is the, like 100 units are there. Okay, so 100 value divide by 2. So that is 50. So N is your total frequency of the class limit. Suppose this is the question. 20 to 30, 30 to 40, 40 to 50, 50 to 60, 60 to 70. 8, 26, 30, 20 and 60. So first you have to make the table cumulative frequency like this. Now frequency is given like this. Okay, if you will add all the value 8 plus 26 plus 30 plus 20 plus 16, you will get 100. Now n by 2 is how much? Total frequency is 100 divided by 2. That is what? 50. Now the 50 is coming. This 50 will range in 40 to 50. Okay, 40 to 50 median class, this 50 will range. Yes. Now, if this the median class, what is the lower limit of this median class? So L1 is the lower limit, L2 is the upper limit. All right. Now, and what cumulative frequency we take what? So remember, cumulative frequency we always take the preceding class interval. So what, in whichever class interval our lower value or upper limit is there, preceding class interval cumulative frequency we take. Now put the value. What is L1? L1 is 40 plus L2 minus L1. 50 minus 40 is what? That is 10 into N2 minus CF. N2 is what? 50 minus CF is we will take 34. Okay, divided by frequency is what? Frequency is 30. This is the frequency. And if you will calculate, you will get 45.33. So N2 comes 40, N2 comes 50. So this will range in 40 to 50 median class. See, so how to check the answer? If your median becomes between 40 to 50, because we have taken this class interval. So the answer should always lie between 40 to 50. If your answer is less than 40, Okay, if your answer is more than 50, then it is wrong. The answer that you have computed is wrong. Okay, so it is 40 to 50. The answer will always lie in between 40 to 50, 45.3. Okay, now this is one relationship between mean, median, mode. Okay, how to remember this relationship between mean, median, mode? Okay, we always say in sequence, mean, median, mode. We never say mode, mean, median like this. Do we say like this? No, we always say mean, median, mode. So start from your right side. Okay, mean, this is the right side, then median. Okay, write it from right to left. Mean, median, mode. Now, normally we say that you are too mean. Okay, you are such a mean person. You are too mean. We say, na, you are too mean. So write two over here. And what comes after two? After two, what comes? Three comes. So mode is equal to 3 median minus 2. So this is how to remember. If you remember in this way, okay. Otherwise, you can learn in this way. So write from left to right, write mean, median, mode. And normally we say, na, you are too mean. You are too mean person. So too mean is there. Okay. 3. After 2, what comes? 3. So mode is equal to 3 median minus 2. Done. This is important. Next is what? Next is the mode. Mode means the occurrence of the value. How much time the value is occurring, that is mode. So which occurs more number of times the number in the data set is what? Mode. So most frequently occurring. Like if I say 2, 3, 4, 8, 3, 1, 6, 4, 3, 9, 10, 13, 3, 14. Okay, this is what? This is the data set. Now, what number is repeating many times? So if you will see number 3 is here, number 3 is here, 3 is here, 3 is here, 3 is here. It means 3 is occurring, so 3 becomes the mode. So in any distribution, it may happen that there are more than one mode also. One mode is unimodal. More than one mode is bimodal. Okay, bimodal. Okay, two modes are there. Bimodal. One mode is there, unimodal, and more than two mode is there. So it is multimodal. Now let's calculate the mode of ungrouped data. So ungrouped data is, suppose mode is given. 23, 25 data set is given. 26, 21, 27, 28. Now which number is repeating more than one? So number 23 is repeating. 23 is here also, 23 is here also, 23 is here also. So it is repeating 3 times. So that is mode is 3. Now, how to find the mode of grouped data? So this is the formula. So this is the formula of median. L1 plus L2 minus L1 into N by 2 minus CF upon frequency. And this is the formula of mode. L1 plus L2 minus L1, frequency 1 minus frequency O divided by 2F1 minus F0 minus F2. So frequency F0 is the class limit frequency. F1 is one preceding class limit frequency and F2 is next class limit frequency. And L1 is lower limit, L2 is upper limit. All right. So lower limit L1, L2 is, this is upper limit. F1 is frequency of the model class or class limit where we have found the mode. Okay, the model class. F0 is frequency of the preceding class, like suppose 20 to 30. In this range, our mode will come. So this becomes F0, preceding becomes F1, and next becomes F2. So 1, 0, 2. All right. Now, let's do some of the important formulas. Okay, let's see the formulas from where the question comes in exam. So first is current ratio. Current ratio means current assets by current liabilities. Current ratio, it is a part of what? It is a part of liquidity ratio. Liquidity ratio means the ratio, it tells that how much a company is capable to fulfill their short-term obligation. Like from your current assets, how much do you have current assets, you can convert it into cash quickly. That is current ratio. Less than a year. Now, what is the ideal current ratio? Ideal current ratio is 2:1. Means your current assets should always be more than your current liabilities. If your current ratio is 2x and your current liabilities is x, that is ideal for the firm. Quick ratio, it is again a part of liquidity ratio. In quick ratio, see, we do not include inventory and prepaid expenses. Why? Because see, if needed, can you convert your entire inventory within few hours? Suppose you have the inventory of 50 lakh rupees in your godown. Can you convert your inventory quickly? No, it will take time. It will take months also. It will take weeks also to convert. So that is why if we need emergency fund, if we need quick money, we cannot convert our entire inventory. So that is why from current assets, the inventory and the prepaid expenses will be deducted. Prepaid expenses means the expenses that you have already paid in advance. Suppose let's take an example. Your factory is installed a place, okay, you have installed your machinery in a factory in a place, and every month you are giving 20,000 rent. Okay, you know that every month you have to pay 20,000, so at once you have paid 2,40,000. So you have paid the rent annually. So because this the money you have already paid, the money, the cash outflow is there in from your company, cash outflow is already done. The money which you have to pay after some time you have already paid in advance. So that is why this is what this money you will deduct this money, because the money that you have already paid in advance, this the money you have to pay it later, but you have paid in advance. So we will not going to include this in our quick ratio. That is why prepaid expenses and inventory both are deducted in quick ratio. Quick ratio means the money that you want to convert quickly into cash. That is why inventory in these two are deducted upon current liability. Then this quick ratio, very important. Net working capital ratio. Okay, working capital means the capital that you need in your business for your operating activities, like for purchasing raw material, for giving salary to employees, for giving wages to labor, for advertisement expenses, for factory overhead, for material expenses. So these are the things that you need working capital. So out of your total current assets, how much working capital you are using for your operating purpose? That is net working capital into 100. Now, raw material consumption to cost of production ratio. Raw material consumption means, okay, how much you are producing in your company. Out of that, how much for, like, you have to produce 10,000 units. Okay, you have to produce 10,000 units. Now, for producing this 10,000 units, how much raw material you have purchased? What is the value of raw material that you have consumed in order to do the production of 10,000 units? That is what we need to calculate in raw material consumption. How much raw material company has consumed in order to do the production, and what is the cost of that production. So value of raw material consumed upon cost of production into 100. This is also important. PBT ratio, very easy. Profit before tax upon net sales into 100. Okay. So how much profit the company has made before paying the taxes out of the sales the company has made. EBITDA is what? That is profit after tax plus interest, depreciation, tax, and amortization. So this is the operating profit before depreciation and amortization. That is EBITDA. Again, you are how to measure the profit. You will only see, company will only measure profit out of their sales. If the company has made more sales, more revenue is there. More revenue, more profit is there. So that is why we always take net sales in denominator. Return on capital employed, operating profit ratio important. EBITDA upon total side of the balance sheet. Return on capital, how much return the company is expecting on their, how much capital the company has invested, and out of that capital, how much return the company is expecting. Like company, okay, the shareholders, they have put 10 lakh capital into the company, okay, for investment purpose. Out of this 10 lakh capital they have invested, how much returns the company is expecting from this capital invested. That is EBITDA upon total side of the balance sheet. So we will take asset side of the balance sheet, not liabilities, because asset will generate you income. Liabilities are the obligation of the company. Operating profit ratio means the for doing your operating business, how much profit the company has made. So operating profit upon net sales into 100. Debt equity ratio means what is the composition of debt, what is the composition of equity, how much debt company has taken and how much equity company is having. So long-term liabilities upon tangible net worth. So tangible net worth can be calculated, the net worth of the company if given in the question, minus all the types of intangible assets like patents, trademark, copyright, goodwill. If net worth not given, then you can calculate from capital, reserves, given in your liability side, surplus and share premium. Debt service coverage ratio, what it says means how much company has taken the debt. We know company take borrowed money for expanding their business, for doing their business. Now, how much debt the company has taken, and is company liable to pay that debt? Can company pay off that debt with principal and interest amount? So it basically tells with the help of DCSR. DSCR tells you that whether the company is capable to repay the debt. In debt, the principal plus interest, both amount are included. So that is why the principal plus interest is there. PAT plus depreciation plus interest on term loans. See, if you are repaying the money back to the bank, will you only repay the principal amount? No, you have to repay the interest. You have to pay the interest also. So that is why P and I both are included. Important. Inventory turnover ratio means cost of goods sold upon average inventory. How much inventory the company is having. Out of that, how much goods the company has sold, what is the cost the company have incurred in order to sell the goods that company is having right now. So cost of goods sold, opening stock minus closing stock plus purchase plus direct wages. Okay, average inventory, opening stock plus closing stock divided by 2. That is how to find average. Debt turnover ratio. Okay, this was the question that came in December 2025. The debtor turnover ratio. So what is debtor turnover ratio? Debtor turnover ratio tells about how fast a company collect money from customers. Like I'm a company, okay, I have sold goods to the customers, and customer told me that okay, I will pay you the money after 2 months. So how fast I'm collecting money from customers. So the speed of collecting money, that speed of collecting the credit sales, it shows if it is higher, then it is good for the company. If the speed of collecting money is low, it is not good for the company. So debtor turnover ratio, credit sales upon average receivables. Now, next is vanquish ratio. Vanquish ratio, what it says that how many years the company will take to repay its debt using earnings. So if company has made huge earnings, so the earnings will be repaid. Okay, the amount will be repaid with those earnings quickly. If you have made huge profit, then you can easily repay the amount. But if you have made not much profit, then it will take time to repay. So vanquish ratio tells that the debt repayment ability is how much. If it is lower, okay, less burden is there. So how many years a company will take? If the year is less, it is good for the company. Means in less year, the company has repaid the whole amount. In more, the company is taking more years to repay the amount. That is not good for the company. So lower is good. Interest coverage ratio is all about EBITDA upon interest on borrowings. So how easily uh, the company can pay interest on loans. So it is the ability to pay interest. See, vanquish ratio tells you the repayment ability, the debt repayment ability. And interest coverage ratio tells you about the ability to pay interest. So if the ability to pay interest is higher, it means the company can pay the amount easily back to the bank. All right. So these are the few ratios that are very, very important. And out of these ratios, last year the question came from vanquish ratio. Okay. And interest coverage ratio. These two were the topics. Last year the question came in ABM. Vanquish ratio in ABM and interest coverage ratio in ABFM. Now, what does the first question say? Robert Owen and Charles Babbage have given perspective regarding people management. What were they? So, what were the perspectives given by Robert Owen and Charles Babbage related to their human? So, we know that every individual is different. Okay, the perception is also different. My perception would be different from your perception. Now, what Robert Owen and Charles Babbage has given the perception regarding people management. So, it was Robert Owen believed that in better working conditions for workers, while Charles Babbage focused on the division of labor. So, Robert Owen has conducted one experiment, and in that experiment, Robert Owen has concluded that the workers they were not giving good condition. So it's the duty of the company that company should provide better conditions for workers so that they can work properly. While Charles Babbage has said that we should not give the entire work as a whole. We should divide the work into small pieces and then we should allocate those work to our employees. So that is what said by Robert Owen and Charles Babbage. I hope this question is clear to you. So what Robert Owen has said is that advocate of better working conditions. So Robert Owen has said that humans are what? Humans are vital machines. They are important machines for the company. So that is why it's our responsibility to give them good condition. And Charles Babbage has said that division of labor means work should be divided into small and manageable activities so that it becomes easy for everyone to understand. All right. Now, so Frederick Taylor has also given the concept of scientific management approach. The work should be done in a scientific management means new technology, new techniques should be provided to the workers so that they can do their best. And some of the major assumptions was of Frederick Taylor that was the task should be broken down into simple units so that it becomes easy to understand everyone. Then people will do any kind of activity in return of the money. Yes, it's correct. If people are doing any activity, then in return they also want something. So in return, the company should give them the fair compensation. And the best technology should be used by the people. Now, next question number 2. A case study is there. So what does the case study say is that a major public sector bank recently implemented what? A performance appraisal system. So a bank has implemented performance appraisal system. What is performance appraisal? The appraisal is given to you on the basis of the performance of employee. So to see that how much employee has performed throughout the its life or throughout the year in the company. So according to that, the appraisal is given. Now, in this performance appraisal, the bank focused mainly on numerical targets. Why? To boost employee productivity. After half a year means after 6 months, although task completion rates were improved, but middle level managers they have raised the concern that employee engagement is not done properly, team collaboration was not done properly, customer experience was very bad. See, basically this public sector bank, it focused on numerical targets and it ignored the qualitative targets. So this created interdepartmental friction, project delays and increased attrition. So this created the like delays in all the project. Okay, the conflict was there and it increased what? It increased the way how they have to do their work. So it basically increased the questioning process that why this could not happen in a limited time. So what is the key weakness in this approach? What should the HR department do to rectify it? So this was the basically this was the problem that arose. Now to improve such kind of problem, what rectification the HR department will do? What is the key weakness? So because from this case study, from this scenario, we have experienced that the bank majorly focused on numerical targets. And when bank was focusing on numerical targets, so qualitative targets were ignored. So excessive dependence on quantitative targets integrate 360-degree feedback. So there was the excess dependence on quantitative measures and to improve this, the bank should use 360-degree feedback to improve the qualitative criteria. So this is the answer. Why 360-degree? So that bank should know that what they have done in the past. They have focused more on numerical targets. So employee engagement was very less, customer experience was very bad, and team building, team collaboration was very bad. So 360-degree will help this to rectify it. Option A. Now next, question number 3. Method most suitable when number of employees is very large and pair-wise comparison is required. So in the question only the answer is given. So what is that method? We know that in performance appraisal there are two types of methods. Some methods are traditional methods and some methods are modern methods. Now, in traditional methods, what we have? In traditional methods, we have ranking method, we have rating method, then we have comparison method, then we have paired comparison method, uh, forced distribution method. So these are all the methods in traditional approach. Similarly, in modern approach, what different methods we have? We have 360-degree, we have bars, we have assessment centers, then we have management by objective, we have management by exception, then we have 720-degree appraisal. So these are all the methods in modern modern methods of performance appraisal. These are all the techniques. Now, which method is suitable when number of employees is very large? See, when the number of employees is less, we can use comparison method. We can easily compare employees, like employee A can be compared to employee B. When the organization is having very less employees. But if the organization is very large, employees are in very large number, so in that case, paired comparison method is used. Okay, so in this we will make the pair. We will make the pair like AB is compared with CD. EF is compared with GH. So this is what? This is the paired comparison method. So as you can see, in comparison method, it is okay in comparison method where each employee is compared on certain selected factors. Like employee A is compared on the basis of leadership. Employee A is compared on the basis of punctuality. Employee A is compared on the basis of hard work with employee B. So in this, single employee is compared. It is known as factor comparison method. But when the number of employees is large, it becomes difficult to compare and rank them. So in this case, we use what? We use the paired comparison method. All right, when the number of employees is large, so in that case, we use paired comparison method. All right. Now, straight ranking method is what? Similarly, the ranks are provided. Okay, 1, 2, 3, 4 means rank is given according to the work the individuals have performed in the company. Graphic rating scale is what? That is, rating is provided. Like, I will ask you that employee A, how much marks you will give in punctuality? How much rating? So you will give 4 out of 5 in punctuality. In hard work, you will give 3 out of 5. So this is what the graphic rating. Similarly, when you order anything, okay, and when you receive that order, so you give rating. If you like that product too much, you give 5 out of 5. If you like product average, you will give 3 or 4. So it is just like that. And forced distribution, this we will study when we will do this question. All right. Understood all the 3 types of methods? Now, question number 4. 3 statements are there. It is based on the Holland topology. So what does the Holland topology says that? See, Holland topology personality, what it says that according to the personality, the individual should do their work. Means if my personality is like, I love to do physical activities. Okay, I have more strength to do any work. So I can become mechanic. I can become a worker. I can become farmer. So the job should match the individual personality. Means job should match with the personality of individual. Personality of individual. So like the Holland has given 6 types of personality. And this you can learn as at RASEC. What is RASEC? That is R for realistic, A for artistic, I for investigative, S for social, E for enterprising, and C for conventional. So if you prefer physical activities, if you love to, like, if you have a lot of strength, then you can do the work of mechanic, drill press operator. If you are a practical sort of person, you are a stable sort of person. If you are investigative, like You love to do investigations. You love to find the solution for any problem. You love thinking, understanding. You are very much analytical, a curious sort of person. Then you could become biologist. You could become mathematician. You could become news reporter if you want to do the investigations. If you are a such type of person, like you love people around you, you love to make community, you love to be in a group, so you can become a social worker, you can become a teacher, you can become a psychologist. So if you are sociable, friendly, or cooperative sort of person. If you are a conventional sort of person, conventional means like you love to do what you are doing, means from the past 10 year you are doing the same type of work, okay with that. You don't want to add any extra skills. Okay, you don't want to learn anything new in your life. You are okay with the old type of methods in which you are working. So if you are such type of person, then you could become accountant, corporate manager, bank teller, file clerk. Enterprising is what if you are an energetic type of person, means you always want that everyone around you should listen what you are saying. You can influence other people better. You can persuade other people better. So you could become a like salesman, or you could become a lawyer, you could become small business manager. And artistic means if you love art, if you love painting, if you love drawing, so you could become painter if you are an imaginative sort of person. So this is said by the Holland, given by Holland, and it is known as Holland typology of personality. Very, very important. So what does the statement says that an individual with an investigative personality type is described as analytical, original, curious, and independent. Yes. Conventional type prefers rule-regulated, orderly activities suited to rules like account or bank teller. See, in conventional we have na bank teller, file clerk, correct? And it is based on matching. Holland theory is based on matching an individual's personality with their job. So this is also correct. So we can say henceforth all the three statements are correct. All right. Now, next, a highly competitive officer who sets tight deadline, multitask, and hates waiting is likely to be a person who loves to have tight deadline, who do multiple tasks at the same time, and who hates waiting is likely to be what type of person that is known as. So it is a type A with high need for achievement. Means they want to achieve everything in their life as soon as possible. They do multiple activities at the same time. So two types of personality has been discussed: type A personality and type B personality. So type A personality, this type A and type B personality have been given by Friedman, Mayer, and Ray Roseman. They have mentioned these characteristics. So type A personality, if a person is having type A personality, it means they are restless by nature. So he always moves, walks, eats rapidly. That person is very impatient. That person does not like to get waited by others. That person is a multitasker. See, at this point is the point where many bankers will make mistake. They will say multitasker, they will take that multitasker is a good thing, so they will take type B personality. No. Type A personality means multitasker means they are doing several tasks at the same time. One task is not completed, still they are going to next task. Second one is not completed, again they are moving to the third task. So it means they are scheduling more and more in less time. Usually does not complete one thing before starting on another. So that is type A. Does not have time to relax and enjoy life. Whereas type B personality people, they have just the opposite characteristics of type A. Type B personality, they are more relaxed. They have time. They keep their professional and personal life separate. They have a balanced outlook in life. Option B. Next, what are the relational EHRM activities? recruitment, training, payroll, processing, or performance management. So in relational EHRM, recruitment comes, training comes, performance management comes. So relational means having a relation which connects two of the things. But payroll processing is not a part of relational. So 1, 2, and 4, option B is the correct answer. So in EHRM, we have operational EHRM, relational EHRM, and transformational. Operational means that is related to your daily activities. Daily activities means doing your administrative task like maintaining payroll, giving salary, purchasing raw material, selling products. So that is operational. And relational means that creates a connection, interaction between HR and their employees. So recruitment, training, performance management, these comes under relational. And payroll processing is the part of operational EHR. All right. So that is why option B is the correct answer. Next, a newly promoted branch manager feels stressed because HO expect business growth. Okay. Staff expect supportive leadership and customers they expect fast service. So they feel stressed. Why? Because what type of conflict person is suffering from their role? Inter conflict, intra conflict, role stagnation, or role erosion. Stressed because one person, okay, single person is performing multiple activities at the same time. Now, see, if I ask you that you have to complete this task as soon as possible with minimal time. And at the same time, I'm asking you that there should be no error. It should be error free. So you only tell me how could two things can be done at the same time? Means you are also asking that the work should be completed before time as soon as possible. So if work is completed on time, but we cannot give you 100% surety that it will be error free. Might be there might be some errors because we are doing the task in a hurry. So there are chances that error may happen. So that is what it is creating a intra role conflict. When you are having conflict in your own role means at the same time I'm asking you to become efficient and effective. So that is intra role conflict. Next, question number 8. 5 statements are given to you. You have to tell which is the correct statement. Ethical practice is a key competency for HR professionals. Yes, those who are HR professionals, they have to maintain ethics in the company also. Correct. Now, business acumen includes understanding financial principles and industry. Business acumen means everything related to business. So it includes understanding the financial principles, helping employees, seeing the industry trends, industry pattern. Relationship management helps improve collaboration. Yes, if a good relation is there between a superior and subordinate, so it will help in improving collaboration also. Critical evaluation involves analyzing data for better decision making. Critical evaluation means if you are evaluating anything, if you are testing anything, if you are assessing anything, you need to analyze each and every minute thing for making better decision. Then only company can make better decision if they have analyzed every minute data. Correct. And consultation means what? Offering expert advice to employees. This is also correct. So all the 5 statements are correct. Option A. Done. Next, question number 9. Assertion and reasoning. Assessment centers. Assertion is saying about assessment centers. Now, why assessment centers are used? Okay, this assessment centers, it is a topic under, it comes under which topic? It comes under the performance appraisal. assessment centers, and this is the modern method of performance appraisal. It is a modern method of performance appraisal. Assessment centers are used mainly to test multiple skills. Why? To test multiple skills of a candidate. I want to test your communication skill. I want to test your technical skill. I want to test your financial skills. So in this, what I will use assessment centers. So in assessment centers like role playing are there, in basket exercise are there. So I will put you in that circumstances so to check your different skills. So these are used for managerial selection, means for the high level selection. Yes, that is why I'm testing multiple skills. Na? Multiple skills are tested when you are I'm choosing you, I'm appointing you for the position, for the high level position. That is why assessment centers are used. These are used because they simulate real job situations, yes, to assess competencies. So I need to test multiple skills, I need to test multiple competencies. That is why I'm using assessment centers. So both the statements are correct and R is the correct explanation. See, in assertion and reasoning sort of questions, two things you have to make clear in your mind. First is you have to see that are these two statements correct? Assertion is correct, reasoning is correct. Okay. Then second thing you have to see that are these two statements related to each other. So when both the statements are correct, then after that you have to check one more thing, whether the relation is or not. If assertion is correct or reasoning is wrong, or reasoning is correct, assertion is wrong, then you can easily find out the answer. But when both the statements are correct, then you have to see that whether R correctly explains A or not. See over here, R correctly explains A. Assessment centers, these are used for managerial selection. Why? Because they simulate real job situations to assess different competencies of employee. So option A is the correct answer. Next, assertion and reasoning. Forced distribution method reduces leniency error. Yes, it reduces the error. Now, employees are placed in a fixed performance category. Yes. So to improve the biasness, okay. So to improve the, you can say, uh, impartiality. That is why employees they are placed in a fixed performance categories. Now, what is fixed performance category? This is so in this method, employees are placed into different performance categories according to a fixed distribution curve. Like I say, from 100% employees, we can only keep at the top level 10% of the employees. Although we have 15 employees that we can keep it at the top level, but because this is already fixed, in fixed distribution curve is there and this criteria is already fixed, so we cannot keep it 15 employees, we can keep only 10 employees. So that is what a fixed distribution curve, it improves the biasness and employees are categorized into groups like top 20, middle 60, bottom 60, bottom 20, and it is based on the past performance. So that is why it is known as traditional methods. So traditional methods, the individual past performance is measured. And in modern methods, individual current performance is also measured. So forced distribution method reduces leniency error. Why? Because employees they are placed in a fixed performance category. So both are true and R correctly explains A. Now question number 11. Three statements are given. The first step in SAT is what? It is systematic approach to training. Approach. So first step in SAT is training need analysis. Yes. In systematic approach to training, first the company has to look, is there any need for training or not? They have to analyze. Selection and development of trainers is the fifth step in SAT. So yes, in SAT, we finally after seeing all the after like in all these steps, okay, last step is selection and development of trainers. Yes, it is correct. And it is used only for external training programs. No, it applies internal training as well. It is not only for external training programs. So 1 and 2 are correct and 3 is wrong. Option B. Okay, so see, SAT, it applies to both internal also and external training also. So systematic approach to training is what? It is a structured and logical method that helps first to design that is there any need of training or not. Yes, if you have hired new employees, then you have to provide them training. Then you have to implement the how you will provide trainings, who are the trainers, who are trainees, and then you have to evaluate training programs. That the for what purpose the company has provided you the training, now that purpose is fulfilled or not. So it ensures that training is effective, efficient, and aligned with organizational goals. So like example is given of systematic approach to training. So company has noticed that there's a drop in customer satisfaction. Why there's a drop? Because of poor communication skills. So now company has used a systematic approach to training. So first company will analyze that why there is the communication gap. Then company will design that yes, we have to provide training, communication training to our employees. After that, interaction will be there. Then finally, it will be implemented. The training is provided to employees. And at last, we will check that the training which we have provided, which the company has provided, now the customer feedback is improved or not. All right, so these are all the steps in systematic approach to training. Next, which of the following are motivators as per Herzberg? So achievement, recognition, job security. So achievement is a motivator, motivation factors. Recognition is a motivation factors. But job security is what? It is hygiene factor. So yesterday I told you in when we were doing ABFM, I told you what are Herzberg and motivation factors. So achievement and recognition comes under motivation and job security is a hygiene. So it was asking motivators. So 1 and 2 are correct. Next, question number 13. Three statements are given on ERG model. ERG is existence, relatedness, and growth. So statement one, what it says that ERG stands for existence, relatedness, and growth. Yes, it's correct. ERG theory is a modification of Maslow's hierarchy of need. Yes. In Maslow hierarchy of need theory, we have seen 5 stages that individual will fulfill their needs in a hierarchical order, 5 stages. But in ERG, we have only 3 stages. First is existence, second is relatedness, and third is growth. In ERG theory, love and belonging and self-actualization of Maslow's, these are included in a relatedness category? No, these are not included in a relatedness. So 1 and 2 are correct and 3 is wrong. See, physiological and safety are existence, love and belonging, and some part of esteem is under relatedness. Some part of esteem and self-actualization is under growth. Question says that self-actualization is a part of relatedness. No, it is wrong. Next, question number 14. A bank introduces a system where employees they are setting targets jointly with their reporting manager. See, in the question only the answer is there. Employee they are setting targets with their reporting manager. So when the goals are set with the joint efforts of manager and employees, what is that known? What is that set? That is known as management by objectives. Management by objectives. Now, BARS is what? It is behaviorally anchored rating scale. In this, the individual's employees' past performance is measured. Their past behavior is measured. Past behavior is measured through anchors. Different. It is known as PARS. 360-degree appraisal we have seen. It is appraisal where the we take feedback from all of the people. Suppose we want to do the appraisal of this person. So company will take feedback from clients, company will take feedback from customers, company will take feedback from peer members, company will take feedback from suppliers, company will take feedback from all other people, not only from the top manager. And assessment centers, this we have done right now. So option B is the correct answer. Now, which of the following correctly defines the compa ratio? So compa ratio is what? It defines its employee salary. See, compa ratio tells you that like what salary you are provided in the company, that salary is according to the market standard or not. Like the account, okay, and the person is being appointed as an accountant in any company, and the market standard says that the salary of accountant is 45,000. Now the company is appointing accountant. Now company is giving 45,000 or not to the accountant. So it is the salary is provided as per the market standards or not. To check this, there is one formula. Employee salary upon midpoint of salary rate means the employee salary is, suppose the market standard is 45,000. All right, and employee salary is 30,000. So 30,000 divided by 40,000, 45,000, because the market standard is what? Market standard is 45,000. So we have 30 divided by 45. It means company is paying 66.67% of market standard. That this is compa ratio. So compa ratio basically tells that the salary which the employees are getting, that salary is according to the market standard or not. And to find it, that it is, if it would be 100% means it is according to the market standard. If it is less than 100% means the employee is underpaid. If it is greater than 100%, it is overpaid, employee is overpaid. And if it is exact 100% means employee is paid normally according to the market standard. So this is the formula. So if it is 100% or 1, the employee salary is the midpoint. Below 100%, employee is paid less than the midpoint. Above 100%, employee is paid more than the midpoint. So compa ratio, in short, we say it is the short for comparative ratio. It is a metric that is used to see whether the employee's salary is equal to the midpoint of a salary or not. It helps to assess whether employees are paid fairly or not, according to this formula. In Bloom expectancy theory, what does valence refer to? Valence means how much value is given to the outcome of the individual. So how desirable the outcome is to the individual. The result that the individual is getting, is it okay? Is it okay that individual feels that, okay, I have given my 100% or not? So how desirable the outcome is to the individual of the company. So option C. So we have Bloom's expectancy theory are effort, then instrumentality, then valence. Effort is the performance the individual gives. Instrumentality is the outcome, and valence is what? That how much that outcome is desirable to the individual. Now, 17. Which performance appraisal method is described as placing predetermined percentage of employees into fixed performance categories? Just now we have done this question. Tell me the answer. So just now we have done that top 20, middle 60, bottom 20. It is forced distribution method. Next, three statements are given. This question is on the topic phases of conflict. What does the statement first say? The prelude phase is where the arguments and insult first become openly visible. See, in phases of conflict, total we have 5 phases of conflict. What is the 5 phases? This prelude phase, triggering phase, initiation phase, differentiation, and resolution phase. Now, prelude phase is the phase means different levels of conflict. We can say phases of conflict means the levels of conflict. See, prelude, it is not the starting phase of the conflict. Prelude is a phase where your opinions are not matching, where there is a difference in your opinion, where there is a difference in interest, background, religion. It is a phase which shows that two persons are different to each other and there is lack of coordination. So this stage includes all the factors that might lead to a conflict, but the conflict has not yet started. Then triggering phase. A phase will come when one will get triggered. Like a conflict does not start on its own. There is always a specific event which gives the initiation of conflict. Now, what is that phase? That phase is known as the triggering phase. When the other person gets triggered. Like example is there, Ram and Sham never got along due to their different family background because Ram and Sham both are working in the same company and they are never together. Why? Because they have different perception, they have different backgrounds, they have different thought process. So they are never together. So during Sham presentation, when Sham is giving presentation, at that time Ram suddenly stood up and says and criticized the Sham that Sham has not added the relevant point in the presentation. Sham's presentation is very bad. He does not have good skills to speak. So all and which actually triggered the conflict. Now the Ram has triggered Sham. So how Sham will keep quiet? So after this, the Sham will also start fighting. So initiation is the phase where actual conflict starts. This is the phase where actual conflict starts. So initiation with the actual conflict begins. So if in the exam the question comes that what is that phase known where actual conflict starts? So do remember that prelude is not the first phase. Initiation phase is the first phase. Then the differentiation phase will come where both party will try to explain why they are different from each other. They will express their viewpoint. Then at last the resolution phase will come, the phase where all other people will try to resolve your conflict. Since conflict do not lead to positive outcomes if left unresolved. So individuals, they have to find a midway solution for resolving the conflict. And this is only possible through compromise and understanding. Alright, so prelude phases where arguments and insult first become openly. No, it is not. It is a initiation phase. So this statement is wrong. Triggering phase involves a specific event that sets off the conflict. Yes, it is a phase which gives the birth to conflict. Correct. And differentiation phase is a phase where both sides will express their viewpoint. So both 2 and 3 are correct. One is wrong. Next, question number 19. Operational EHRM deals with the daily tasks, administrative functions, payroll, and employee data. Correct. Just now we have seen that operational is a phase where we do our daily routine task. Relational EHRM is what? Which connects the HRM practices, HR activities with the managers. So it is known as social EHRM supports process like recruitment, training, selection. Correct. Transformational EHRM is focused on basic day-to-day HR operations. No, basic day-to-day HR operation is related to operational EHRM, not transformational. This is wrong. 1 and 2 are correct. Okay, so transformational EHRM it deals with strategic HR activities like knowledge management, learning, no, you can say yes, learning sessions, strategic reorientation, not daily operations. Question number 20, assertion and reasoning. So again, assertion and reasoning question comes. So what you have to see? First, you have to see that are these two statements right or wrong? Yes. If the both are correct, then you have to see whether these are related or not. So in McLeod achievement motivation theory, individual McLeod achievement means this is achievement. Individuals with high need for achievement, they prefer tasks that are very easy or completely impossible. Are they do that task which are very easy or very impossible? No. They do that task which are difficult but possible. Difficult task but possible to do. So this is incorrect. Now, need for achievement, individuals are motivated by the desire to demonstrate competence. Yes, they always want to compete with others. They always want that everyone should give them the feedback on their performance. So people with this need want to accomplish tasks, set goals so that they can achieve, and they enjoy challenges. They enjoy challenges, prefer to do tough tasks. All right, so this is wrong and this is correct. So A is false and R is true. Option D. Okay, so this is McLeod achievement motivation theory. Now, achievement we have seen, they prefer challenging tasks. Affiliation is what people with such kind of need, they always want to have control on, they always want to make good relations with other. So people with high need, they prioritize teamwork, friendship, social interaction. And need for power, it indicates that people which with such type of need, they always want to control others' life. They always want to control others. The capacity is to inspire or influence the behavior of other people. Now, question number 21, BATNA. BATNA used in conflict management and negotiation stands for. What is the full form of BATNA? Basically, it is asking. So full form for BATNA is best alternative to a negotiated agreement. Now, BATNA, why BATNA is used? BATNA is used when you're not able to resolve a conflict, when you are not able to find a midway solution for resolving conflict. So this is used in case of the finding solutions, that is known as plan B. Okay, so BATNA is what? That is an alternate way to resolve conflict. So BATNA stands for best alternative to a negotiated agreement. That it is a negotiation, it is a concept that comes from negotiation theory that helps to understand their best option. So that if you know that you like example is given in the question. Suppose you want to purchase a car. You want to purchase a price of a car. You have already decided in your mind that if this seller will not give me car at rupees 10 lakh, then I will purchase it from different shop. I have already a price set in my mind. So simple terms, BATNA is what? It is a backup plan, a alternative plan, or the next best alternative, next best choice you have in your mind if things don't work out according to you. So it gives you a support because when you know your best alternative, like imagine you are negotiating the price of a car. Your partner might be that you have another car in mind at a similar price, or you could wait for a better one later. So if the seller is not offering the car at the fair price to you, then you can say that you have one already backup plan in your mind. You can go to somewhere else, you can buy from some other place, or you can wait for a better one. So knowing your partner is important. Why? Because it helps you to make informed decision, so that the seller may not cheat you. You can take proper decisions. Okay, it gives you more power because you are not dependent on reaching an agreement. You can take your decisions well. So avoid agreeing to bad deals. Be confident in your choices, knowing that you have a good alternative. Now, question number 22. In the Thomas Kilmann conflict model, which approach reflects high assertiveness and high cooperativeness? Both are high. Means assertiveness means what? That you are fulfilling your wishes. Means fulfilling your wishes. And cooperativeness means fulfilling the other party wishes as well. Other party wishes, high assertiveness and high cooperativeness. Is it competing? Is it compromising, avoiding, or collaborating? So in collaboration is what means you are coming together. Assertiveness is also high, means you are also trying to fulfill your wish. Okay. And cooperativeness is also high. You are trying to fulfill the other party wish at the expense of your. So collaborating is there. So Thomas Kilmann has given that one can resolve a conflict through 5 stages. Okay, 5 stages are given in conflict model. First is competing. Either first is that you can compete it with other person. First option is suppose two-person are having conflict. First is either you can compete. You will say I am correct. The other will say no, I am correct. I am right, you are wrong. So assertiveness is high and cooperation is low. Means you are trying to prove yourself correct and you are saying that other person is wrong. So here assertiveness is high. Only one can win and it would be definitely me. Second is collaborating. Collaborating means both are saying, okay, let's do 50-50, let's do together. So both are coming together. So high assertiveness is there and high cooperation means we can come together, we can fulfill the need of both the person together. Avoiding is don't indulge in that activity. You are seeing that now we can have a big fight. Okay, so it's better it's better to leave that conversation and stay away. So you are avoiding means assertiveness is very low and cooperation is also low. So you are avoiding, like you are saying, can we talk about this sometime later? Accommodating is what means you are saying that okay, let's do it what you are saying. You are right, I am wrong. Let's do it in your way. So let's just do it your way. So I am saying that you are right, I am wrong. It means my assertiveness is low and cooperation is high. And compromising is what? Here we both are compromising little bit. You are also compromising, I am also compromising. So medium assertiveness is there, medium cooperation is there. All right. So see, in difference between collaborating and compromising is what? Here, what we are saying, you are also correct, I am also correct. Okay, let's do it in your way, let's do it in my way. So we both will get what we want. That is total 100%. But here we are compromising 50. I am also compromising 50. You are also compromising 50. So can we just meet on the middle on this? Means can we come together 50-50%? That is medium assertiveness, medium cooperation. Now the question was telling high assertiveness and high cooperativeness. So both are high, that is collaborating. Question number 23. Five statements are given to you. Statement first says HRM deals with managing employees, including hiring, training, compensation. Yes, correct. HRD, see, difference between HRM and HRD is what? Development is a process which is an ongoing activity. And management is it is a broader concept. It includes HRD also. So we can say HRD is a part of HRM. So HRD focuses mainly on developing employee skill, correct. HRD, it is a subset of HRM. Yes, HRD is what? It is a subset of HRM. And HRM is a superset of HRD. HRM is concerned with administrative tasks, promotions, and record keeping, correct. HRM and HRD together help organizations mature in managing people. So this is also correct. So all the okay. See, statement one is correct, statement two is correct, statement three is correct, but statement four, what it says that HRM is only concerned with administrative tasks like promotion. No. In HRM, all the activities are included, not only administrative. So this is wrong, and five is correct. So one, two, three, and five are correct. So one, two, three, and five are correct, and four is incorrect. All right, done. Next, question number 24. Question on career roles. So in Delton, see, career roles are given by three people. First is Delton, Thompson, and Price. Which stage involves individual defining direction of the entire organization and developing long-term vision as part of top management? So total four stages are given. Career roles by Delton, Thompson, and Price in 1997 given total four stages. This stage it includes from the basic level. Like apprenticeship, it is the first level. Then colleague comes second level. Mentor, third level. And sponsor is fourth level. Apprentice is what? It is just the beginning of the career. Individual is doing routine work. Individual has like any person has entered in the company. Now that person has entered, that person is a fresher for the company. So now the company will provide the guidance, company will act as a mentor, company will provide mentorship. And at this stage, the individual needs to accommodate himself to a certain degree of dependency. So individual is 100% dependent on the mentor. So whatever the mentor will do, whatever the senior manager will say, that person will have to follow. After apprenticeship, next stage comes colleague. Now in this stage, now this person will start making independent decisions. Now this person will give independent contribution, but still this person would be under the mentorship of a senior manager. Mentors are what? Now third stage is what? Mentor. Now this person will come at a position where this individual will act as a mentor for other people, for the freshers. So this stage signifies the beginning of a complex function. Individual develops ideas, okay, must learn to assume responsibility. And the last stage is what? That is the sponsor stage. So at this stage, individual will broaden his skill. Now at sponsor stage, this person will give share their experience with other people. At this stage, individual wants that everyone should come and they should give me respect, they should acknowledge me. So he is required to define the direction in which the entire organization is developing. So he is now a part of the top management. So this is the highest level in the career role. That is what it says. The individual defining the direction of the entire organization and developing long-term vision. So long-term vision as part of top management comes under sponsors. Done? Now, next question. Question on Johari window. The Johari window quadrant that represents information known to self but not known to other is known as. What is known to self? What is the thing that you know about yourself but others don't know about you? So four quadrants are given to you. The self-awareness quadrants it is known as. And this is given by whom? The concept of Johari window, it is given by Loft and Ingham in 1973. So just like we do SWOT analysis of the company, like we find the strength of the company, we see what are the weakness in the company. If any new opportunities are coming, we are grabbing that opportunity, and we are also making our company aware of new threat and danger. Likewise, the person, they have to understand their SWOT. Means understanding self-help in self-development is using one's potential better. So how you can develop yourself by understanding your SWOT analysis, by doing your SWOT analysis. And it is done with the concept of Johari window given by Lofton Ingham. So what is the thing that you know about yourself and others also know you? Like you are a banker. You know this, and other people, those who are working with you, your relatives, your friends, they also know that you are a good banker. So that thing is known as arena. Now, what is the thing that you know about yourself and other persons don't know about you? Like you are a good singer, you know about yourself, but the place where you are working, they don't know that you are a good singer. So what is that thing? That is known as closed. Okay, closed means hidden or faced. Not known to self, known to others. What is that thing that you don't know about yourself, but others know about you? And that thing is known as blind. Like, for example, you are a manipulative person. You don't accept this thing. You say that, no, I'm not manipulative. I don't manipulate any other person. But with your actions, with your words, with everything, it is clear that you are a manipulative person. You manipulate other people. So other knows well that you are a manipulative, but you are not accepting this fact. And dark, it is the thing which you also don't know about yourself, and other people also don't know about yourself. All right, so this is known as Johari window, concept of Johari window. And from this 110%, okay, I'm giving you assurance that question will come. Every year, the question comes from Johari window in every cycle. And this time also the question will come from Johari window, either in the case study format or in this format. Now let's start with the first question. So total we have 55, 56 questions. Let's see in 1 hour how many questions we can do. So which of the following loans to startups would fall under priority sector lending? We know that priority sector lending, so RBI has mandated to all the banks that they have to disburse loans to some of the sectors, and those sectors will be a part of PSL. So what is the amount that is provided to startups that will fall under PSL? It is 48 crore to a company recognized as a startup by DPIIT, 60 crore, 55 crore, or 51 crore. So for startups, what is the amount that is fixed? That is up to 50 crore. Now up to 50 crore, so 48 crore is a part of 50 crore. 48 crore comes under 50 crore. It is up to 50 crore, not exceeding that. So not exceeding that. So 60 crore is the exceeded amount. 55 crore is also exceeded. 51 crore is also exceeded. So up to 50 crore is provided to startups that will fall under PSL category. Option A. All right. So as a startup by DPIIT, loans up to 50 crore be recognized as PSL. As per the Micro, Small, Medium Enterprises Act 2006, classification of enterprises is based on which of the following criteria? So how would we know that whether any enterprise is a micro enterprise, small enterprise, or medium enterprise? So for that, certain parameters are fixed. Okay, classification is given. Now, in these classifications, two types of main classifications are there. That is turnover plus investment. So both the investment and turnover has to be checked whether that comes under micro, small or medium enterprise. So which of the following criteria classification of enterprise is based? That is on not be on investment and turnover both. So both condition has to be followed. If only the investment condition is followed, still it is not included in this. In this, so both the investment plus turnover has to be followed in order to get a classification that whether this enterprise will come under micro, small or medium enterprise. Now, what is the classification? Let's have a look. So this is the classification of MSME. So forget about the current one. You have to remember the revised one. All right, current one. Current one was means the previous one. Now, which you have to follow, that is the revised one. So how we say that this particular enterprise comes under micro enterprise or small enterprise? So if the investment is rupees 2.5 crore and all these values are up to 2.5 crore. All right. In turnover also all these values are up to 10 crore. So any enterprise whose investment is up to 2.5 crore and turnover is up to 10 crore, then that enterprise will be classified as micro enterprise. If enterprise whose investment criteria is up to 25 crore and turnover is 100 crore, then that enterprise will be considered as small enterprise. Yes, good afternoon to all. And if the investment criteria is up to 125 crore for medium and 500 crore for turnover, then that will be included in medium enterprise. Now, yes, you can say what problem you have. Now, so micro enterprise is what? See, if you have remembered the investment criteria, then easily you can remember the turnover criteria. How? Just multiply it by 4. So 2.5 into 4 is what? 10 crore. 25 into 4 is what? 100 crore. And 125 into 4 is what? 500 crore. Alright. So when you will multiply, if you know the investment also, then you can find easily the turnover criteria. Alright. So this is all about the new classification of MSME. So answer would be option number C. Now next, question number 3. Maximum amount of upfront capital subsidy that is provided under class is what? So the full form of class is important. In past exam, one question was there from what is the full form of class? That is credit linked capital subsidies. So upfront capital subsidy is provided. How much amount is maximum for it? Is it 10 lakh, 25 lakh, 15 lakh or 50 lakhs? So it is what? It is 15 lakhs. Okay, 15% or 15 lakhs. 15% or 15 lakh. This is what the upfront capital subsidy maximum amount. So I have given one example over here. See, suppose any micro, small, medium enterprises owner, that particular owner wants to buy a new machine and the costing of that new machine is 50 lakh. Okay, under this class subsidy, how much amount the subsidy can be provided to that particular owner? So under class subsidy, he gets a subsidy of 15% of 50 lakh or 15 lakh. Yes. So 15% of 50 lakh is what? 7.5 lakh. So 15% or 15 lakh, whichever is lower. Whichever is lower. So 15 lakh is 7.5 lakh. Since it is below the maximum cap of 15 lakh, so he will get the full subsidy 7.5 lakh. Now take another scenario in which the cost of the machine is very high. So another example is what? See, machine costs rupees 2 crore. Alright, and 2 crore means what? That is 200 lakh. 200 lakh is what? 2 crore. Suppose the value of the machine is 2 crore. Now what would be the 15%? Because in the class, okay, maximum amount is given 15 lakh or 15%. So if you will calculate the 15% of 2 crore, so you will get 30 lakh. Now, we know that maximum, it is what? It is 15 lakh. So how much you can claim for it? How much maximum amount you can claim for it? You can claim only 15 lakh. So maximum cap is 15 lakh. So in that case, you will get only 15 lakh as subsidy, not 30 lakh. Why? Because it is exceeding 15 lakh. So 15% or 15 lakh, whichever is lower, you will get that subsidy. All right. So business will only get 15 lakh subsidy, not 30 lakh in this case. So effective cost to business, so 15 lakh subsidy is provided. Now how much the money that the business owner has to spend? That is rupees 185 lakhs. All right. Understood this particular scenario, how the question will come. So such type of questions can become in the form of case study also. Like this sort of case study is given and it will be asked. All right. Now, next, so common guidelines for lending MSME sectors. See, only 2 months are left for your exam. So concentrate on your studies rather than concentrating on all these things. All right. Okay. So this is what we have discussed right now. Class. The scheme aims at facilitating technology upgradation by providing 15% upfront capital subsidy. Now, composite loan is what? What is the maximum amount for the composite loan? Means if any MSME enterprises have taken loan, all the MSME enterprises have taken loan, then the composite loan limit is 1 crore. Okay, to enable MSME enterprises so that they can avail for the working capital and term loan requirements through single. I hope this question is clear to you. Question number 3. Now, next question number 4. A composite loan limit of dash can be sanctioned by banks to enable MSME. So, tell me the answer of this question. So, composite loan is what? That is up to rupees 1 crore. All right. Just now we have seen the composite loan is what? That is the loan limit is up to rupees 1 crore. All right. Now, next is which of the following is called specified borrower? Please kindly don't disturb the entire class. Everyone comes here to study. Please let them study, at least those who want to study. Which one of the following is called a specified borrower? Now, who is termed as specified borrower? So this is known as the specified borrower means a borrower that has taken a loan from all the banks altogether. So what is the threshold limit for that particular borrower is to be considered as specified borrower? Suppose I am a borrower. Okay, I am a borrower. I have taken loan from different banks. Now, what is the limit for that thing to be said as specified borrower? So threshold limit for a specified borrower is based on total fund-based credit limit. Now, what is fund based? Fund based means when there is actual transfer of money from one account to another account. All right, this is known as the fund based study. See, the questions are given to you. Kindly give the answers to the question. If you have not studied anything, then start from the scratch. Then only you could be able to answer all these questions. Okay. Now, so what is the threshold limit? So for financial year 2017 to 18, if any borrower has taken more than 25,000 crore, then that borrower has to be still specified as considered as specified borrower. This was 2017-18. But from April 1st to 2019 onwards, more than 10,000 crore at any time if a borrower has taken, then that borrower is considered as a specified borrower. All right. So a borrower whose aggregate sanction credit limit is more than 10,000 crore, then that borrower would be considered as specified borrower. Okay. Chal. Now this is the question, the numerical question. You have to find the debt equity ratio. What is the formula of debt equity ratio? Debt upon equity, that is the formula. Now, what is debt? Debt is the amount that you have taken from the financial institutions, from banks, so that you can expand your business, you can grow your business. Okay. And equity is what? That is your ownership, the shareholders, the promoters of the company. Now you have to find debt equity ratio from all the points that are given in the question. The following are the figures that are taken from the balance sheet. So equity share capital is 1,10,000, preference shares is 30,000, general reserves 50,000. So first we have to see that what are the elements that comes under debt and equity. So debt is what? The debt is the loan. So loan in the form of what? That is the debentures. The company has issued, okay, debentures. So this is what? This is the debentures is the loan for a company. So 50,000 is what? 50,000 is debt. Now, what is equity? So equity means the equity shareholders, the preference shareholders, these are the share capital. So we have 1,10,000 plus preference share capitals is also a part of the company only, 30,000. General reserve means the amount which you have kept as reserve. Reserve for contingencies. So see, contingencies means for emergency period you have kept reserves. So this is also again a part of a company only, a profits of the shareholders only. So 20,000. And from this debentures we have taken as debt. Now, sundry creditors. Okay, so these are what? Sundry creditors are the current liabilities. Now, expenses, preliminary expenses which you have done, that is the expenditure of your company. So we will not include this preliminary expenses. So we will deduct. Now, just sum up all these things. What we get? 1,10,000 plus 30,000 plus 50,000 plus 20,000 minus 5,000. So we are getting 2,05,000. If I'm not wrong, yes. So debt upon equity is 50,000 upon 2,05,000. So this is what? 50,000 divided by 2,05,000. So it is 0.244 is to 1. So this is your answer. So all right. So 0.24 is to 1. Understood? Hmm. Yes, clear this question. All right. Okay. Now next, calculate the current ratio. The question is given to you. Now you have to calculate what current ratio. So current ratio is what? Current ratio, it is a form of liquidity ratio. Yes, right. What is the formula of current ratio? Current assets upon current liabilities. This is the formula. And what is idle current ratio? Idle current ratio is 2 is to 1. Means the current assets should always be double than the current liabilities. If your assets are more double than your liabilities, then it's a good position in the company. So current assets are what? The current assets means the assets which can be converted into cash quickly within a year. So cash is the current asset. Inventory is a current asset. Accounts receivable is a current less assets. So 50,000, then 1 lakh, all right, 75,000. And all right, yes, prepaid expenses, it is also a current. These are the expenses that you have paid in advance. Means the expenses which you have paid in advance. Now these are what? These are your assets. The expenses you have already paid in advance. Now in coming time, you don't have to pay those expenses. So these will become your current assets. So what would be the value? 2,50,000. Yes. So it is 2,50,000. Now, current liabilities, bills payable, short-term loans. So 1,20,000. So 2,50,000 divided by 1,20,000 is what? 2.08 is to 1. So this is your current ratio. Am I clear with this question? right? Now next, question number 8. Net working capital means what? Working capital means what? That is the current assets. Net working capital means what? So how much excess of all the long-term sources over all your long-term assets means long-term. So see, long-term assets means the assets should be more as compared to your liabilities. So if you are having more assets, if you are having more current assets, means you can have more working capital. You have more working capital. That is what the net working capital. So excess of long-term sources over long-term assets. So long-term sources means the money which is coming in the company. So excess of long-term sources over long-term assets. So working capital is the capital that is required for doing your daily work, for doing your day-to-day operations, operating work. Net working capital is current assets minus current liabilities. Excess of long-term sources means what? That is because see, long-term capital, it is not tied up in the fixed assets. So long-term capital, it is used when we say long-term capital means what? It is used for a long period of time, means more than a year. And we need working capital. Working capital means the capital which is used for a short period of time. So that which can be used within a year. So that is excess of long-term over long-term, excess of long-term sources over long-term assets. Example is also given to you. You brought 10 lakh into business for a long term, but you only spent 7 lakh on big fixed things like machines and buildings. Now you have left 3 lakhs. Now this 3 lakhs will be used for your working capital. So excess of long-term sources over long-term assets. So if your long-term sources is more as compared to your long-term assets, means the extra money that is left in the company, it will be used for working capital. I hope now it's clear to you. Next, which of the following statement is not true for efficient inventory management? Not true for efficient inventory management. So if the inventory is managed effectively, it means what? How inventory is managed? When if your inventory is used, it means there's a reduction in inventory. It also reduces your working capital because as and more stocks you will keep in your business, the more stocks are used. That is what the meaning of efficient inventory management. It reduces the net working capital available with the enterprise. How it reduces net working capital? See, which of the following is not true, it is asking. It reduces net working capital available with the enterprise. If the net working capital is available, if it reduces, then how it is efficiently used? All right, so option C is the correct answer. Now, next question number 10. Which of the following is not a source of meeting working capital requirements? Source of meeting working capital requirements. Again, working capital, it is what? It is for a short period of time, less than a year. And source of meeting working capital means what are the things that are available so that company can meet their working capital needs. So suppliers credit, bank finance, other current liabilities, advance payment to suppliers. See, suppliers credit, if you will say suppliers credit means what? That means the supplier is giving the credit period. Supplier is giving you the credit period means you have extra time to pay to the suppliers later on. So you are buying goods on credit right now and later on you will pay it later. So right now you are buying goods on credit, so it is saving your cash. Yes, correct. All right. Bank finance means like loan you are taking from bank, you have to pay the loan later on after some time, not immediately. Other current liabilities means if outstanding liabilities are there, so you can pay it later. But advance payment to supplier, you have already paid in advance. Paid in advance means paid in before. Now, if you have already paid this before, so your money has been outflow from your company, the cash outflow is there, cash goes out of the company. So it is a use of working capital, not a source of working capital. Source means from where you have received the money. We say now that an individual should have 2, 3 sources of income. Means the income from 2, 3 sources from where that particular individual can earn the income. So sources means what? The receiving of the income, the receiving of the finance. So that is why advance payment to suppliers that you have given advance. So that is a use of working capital requirements, use of funds, not sources of funds. Which of the following is a liquidity ratio? So liquidity ratio is a ratio that has the ability to pay their short-term obligations. Yes, can be converted into cash quickly. So liquidity ratio is a in quick ratio is a type of liquidity ratio. Quick ratio is also known as exit test ratio. What is the formula? Quick assets upon current liabilities. Now in this quick assets, so from all the current assets, we will deduct stock and prepaid expenses. Stock minus prepaid expenses. So then it will be we will get quick assets. Okay. Can anyone say why stocks are deducted in current assets? See, stocks cannot be quickly converted into cash. Can you convert your stocks in cash within few hours, within 1 day? No, it will take time. At least it will take 2 days, 3 days, 4 days time to convert your entire stock. That is why we don't consider stock in quick. We want the cash immediately. In a in an emergency on an emergency basis, we need cash. That is why stocks are not included. And this is the expenses that you have already paid in advance, so you will not consider this in your quick assets. Now, question number 12. Which of the following is not correct regarding current ratio? So for same level of current assets, increase in net working capital result in increase in current ratio. Yes, the more working capital you use, the more current ratio is increased. Current ratio can be less than 1. It can be less than 1. If it is more than 1, then it is ideal for the company. Current ratio can be negative. No, this is not. Current ratio cannot be negative, and it is an indicator of liquidity. So yes, this is also. Now, which one is not correct regarding? So current ratio can be negative. See, any company, if they are having more current liabilities and less current assets, so in that case, the company is not in a fit position. The company is not running smoothly. So current ratio can be negative. So this is not correct. It can be 0, it can be 1, but not negative. Now, 13. Commercial paper can be issued by. Yes. See. Okay. See, one, it can be equal to one means current assets, it can be equal to your current liabilities. If you have your assets, then only from that assets you will generate money and you will pay to your liabilities. But if your assets are in negative and your current liabilities are in positive, then uh, is company run the flow, the running, the company will run in a good manner? No, it will not run. So that is not correct. It is asking. So that is why option C. It can be negative. No, it cannot be in negative. Now, commercial papers can be issued by. So these commercial paper, these are what? These are the short-term instrument. Short-term instrument, market instrument. And these are the instrument of the money market. Okay. So commercial paper, it can be issued by only those companies who have a long uh, net worth. So 4 crore and more than that. So who can issue? The corporates can issue. Having a net worth of 4 crore or more than that. All right, next. Which of the following is not correct regarding forfeiting? So it is mainly used in import and export transactions. Which one of the following is not correct? So it is a form of working capital finance. Yes, forfeiting. It is a form of working capital finance for a short-term finance. Yes, for import and export transactions. It is used in export finance. Yes, this is also correct. It is with recourse to the drawer of the bill. Means if the amount is not paid, then can the seller will go to the buyer for the amount, for the due amount? No. So it is without recourse. So it is without recourse. Not correct. So it is with recourse. No, it is without recourse. So forfeiting means that selling your future payments receivable to a bank and getting cash immediately. So suppose you have done the import and export. All right. One is importer and the another one is exporter. Okay, so exporter is what, suppose this is India. India is exporting the goods to the foreign countries. Let's take an example, US. Now, if India is exporting, okay, goods to the US to a foreign buyer, but the US says that right now I don't have sufficient amount. I will pay you after 4 months or after 3 months. I will give you the payment. Suppose the bill is on worth rupees 10 lakh rupees, and the US says that I will pay you the money after 3 months. Now, in this case, when the India needs immediate cash, so India will go to India will use till this invoiced bill to whom? To a bank. So it means selling all your future payments receivable to the bank, and bank will provide the money. So the exporter, the India will reach to a bank for the immediate cash, and bank will give the immediate cash. Now when the repayment date comes and when the bank approaches to the US, so in that case, if the importer US says that I will not give you the payment, so bank cannot go to the back to the India for asking the money. All right. So this is what this is for fitting. So in this case, it is always without recourse. Understood? So similar to this, we have trades transaction also. It is also without recourse. Now this trades transaction, it is for MSME. Understood? Any doubt in this? All right. Okay. Sure. Now next, which of the following is correct regarding letters of credit? So a same type of thing, letters of credit. So this letter of credit, it is issued only when there is the transaction between the importer and exporter. The same if I'm selling the goods, okay, India, and let's take an example, the same USA. Now, India wants to sell goods to USA and USA is purchasing goods from India. Now, these two, they don't know each other well, and they also don't have a good relations. All right. Now, how would India know that if I'm selling goods, if I'm giving goods to USA, now US will give me the full payment? Or how would USA will assure that whatever money I'm sending, I will get the goods in good condition? So that is why a bank comes in between. So bank issues what? The letter of credit. So it's a document that is issued by a bank. So these are opened by bank for export sales by the client, opened by a bank for local sales by the client. Do not carry much risk. No, these carry risk. These are opened by bank for purchase of goods by the client. So option D. Option D is the correct answer. So letters of credit, okay, these give the assurance of the document that the goods will be received in good condition and the amount will be received by the other party, the full amount. So this is the assurance given by the letters of credit document. Under turnover method of assessment, as per RBI instruction, the limit is sanctioned at percent of the projected turnover. At what percent of the projected turnover? See, under turnover method of assessment, RBI says that the see projected turnover method, PAT method, or it is also known as a NAC committee method. Under this method, under the method working capital assessment, this is the method of working capital for assessing working capital, that how much working capital a company needs, an enterprise needs. So normally it is said, according to seeing the working capital cycle, that the enterprise, they need 25% of the annual turnover of gross working capital. Now company need 25%, but what RBI says, that RBI says that out of this 25%, 20% will be given by the bank. 20% bank will provide, all right, and rest of the amount, that is 5%, the enterprise has to bring. All right, this is said by whom? RBI. So it is assumed that the RBI needs 25% of the annual turnover as gross working capital, out of which 20% will be provided by the bank and 5% will be brought as by the enterprise. Now, and this 20% will be provided up to 5 crore, not beyond this. So either 20% or a 5 crore, whichever is less, that will be provided. So banks are advised to grant working capital credit limits to MSME computed on the basis of minimum 20% of the estimated turnover. So what is the amount? That is 20% will be brought, 20% will be given by the banks, financial institutions under turnover method, projected turnover PAT assessment and NAC committee method, and rest 5% is brought by the enterprise itself. Now, next, question number 17. Cash budget method of assessment is more suitable for those enterprise. Now, in which type of business enterprise cash budget method of assessment is suitable? So, cash budget method is suitable in such type of enterprise which the nature of business changes a lot. The nature of business changes a lot means a seasonal operation. So, cash budget method is used when we have a seasonal sort of business. Like suppose, for example, if your business is making the clothes for winter, okay, winter garments. If your business is making clothes for the season winter. Now, for winter season, you must have to prepare all your goods before the month of November. Then only you can sell in the month of November. Then you will get the money. You will the selling will be done in November, in December month, in January month, in February month. So the 4 months will give you the actual sales. And for this actual sales, you have to prepare before first from April onwards. Okay, you will purchase raw material, then you will do the conversion of raw material into finished goods. Then after that, the goods will be packed. Okay, these will be tested, the commercialization will be done, and finally it will be ready to reach in the market. So this is done in case of seasonal operation. All right, so all these are the answers given over here. Now, next question number 18. A DPG, deferred payment guarantee, is issued by the bank for. So payment guarantee is issued by the bank for which type of goods by its client. Guarantee is given. Sale of goods, purchase of goods, sale of capital goods, or purchase of capital goods. So deferred payment guarantee, very easy. It is issued by the banks for what type of goods? For purchase of capital goods. Now, which of the following statement is not true for an infrastructure project? So infrastructure project comes under the long-term loans. Which of the following is not true? So it has a long period. Yes. It reduces the risk for lender as the funds get assured deployment for long term. It reduces risk of the lender. Is it so? It reduces the risk of the lender. See, the risk of the lender is always high in case of infrastructure projects. Why? Because see, infrastructure projects, whenever any company is taking loans for infrastructure project, so it will be 5 years, 10 years, 12 years, 15 years, 20 years, means more than 5 years, more than 10 years. Now these periods are a very long period. For 5 years, for 10 years, for 15 years, if the bank is providing money to infrastructure, then the entire money of the bank gets blocked. And now the bank will always have a fear of risk that whether I will receive my money back or not, whether the company will recover my repay my all the money or not, bank will recover their dues or not. So it reduces the risk. No, it not reduces the risk. Debt equity ratio is high for infrastructure project. Yes, debt equity ratio it is high. Companies they take more debt from bank financial institution. And implementation period, the actual implementation period of all the things in the infrastructure is also long. And sometimes the cost overruns are also there. Option B. So this is deferred payment guarantee. It is issued by bank when a client wants to buy expensive machinery. So this guarantee is given by whom? This guarantee is given by bank. Like we have seen na, the bank guarantee. Suppose the okay seller is there. Now seller is giving the machine. Okay. This is the what? This is the purchaser. Now this purchaser is also a client of a bank. So when seller is selling the machine and purchaser says that I will pay you the money after 4 months, after 5 months. So in this case, the bank comes into the picture and bank will give the guarantee that please provide machines to my customer. If my customer will not pay you the money, I will pay you the money. So this guarantee is given by whom? A bank when their client buys any kind of expensive machinery but cannot pay immediately. So the bank comes into the picture and bank acts as a guarantor for their customer, that is purchaser. If my customer will not pay you the money, if the purchaser will not pay you the money, then I am liable for that. Alright, so DPG is always linked with long terms and it is used for capital goods. Now, next question number 20. Which of the following is not a source of funds for meeting cost of purchase of fixed assets by an enterprise? Not a source of funds for meeting cost of purchase of fixed assets. So source of funds means what? That is from where the funds one is receiving the funds. So credit by supplier of assets. If a credit period is given by supplier of those assets, internal accruals are there. Okay, the company is issuing debentures, but deferred payment guarantee here, the bank gives the guarantee. So not a source of funds for meeting cost of purchase fixed assets, that is deferred payment guarantee. Which of the following is indicated? Because just now we have studied deferred payment guarantee is what? That is when company wants to purchase machinery and in that company is not in a position to pay immediately, so bank will come into the picture. Okay, bank will give the guarantee to the seller for their client, for their customer. Which one of the following is a ratio indicative to the repayment capacity of the borrower? Now, which among the following ratio tells that the repayment capacity of a borrower? That borrower can repay the amount back to the bank. So repayment capacity, how it will be known that whether a borrower is in a condition to repay the amount back to the uh, you can say the supplier or to the bank. So it will be checked only with DSCR, debt service coverage ratio. Debt service coverage ratio means how much one can debt service coverage ratio tells about the whether the company, the individual, or any institution is in a position to repay all their obligations or not. That is only checked with the help of DSCR, debt service coverage ratio. In this debt service coverage ratio, so both principal and interest amount is included in it, not only principal. Because if you are taking loan from any bank, you will pay only principal amount. No, you will also pay interest amount. So principal and interest both are included in. Alright, debt service coverage ratio that tells about the repayment capacity of the borrower. Alright. Okay, so this is about the question number 20, the explanation that what is not a source of funds for buying assets. So source of funds means the money that is received by the company. So internal accruals, company uses their own internal accruals are what? These are the reserves of the company. Debentures, company raises debentures from for company issue debentures, and the investors they purchase debentures. Credit by supplier of, but deferred payment guarantee it is given by a bank. It is only a guarantee that is given by a bank, not actual money. And this guarantee it will be fulfilled when the money is not given. Okay, when the buyer is not in a condition to pay to the seller, then the bank will give the money. Otherwise, not. So if buyer doesn't pay, then bank will pay. Otherwise, not. Now, next question number 22 and question number 23. Which one of the following is not correct regarding term loans by banks? Term loans are for a long period of time, means for more than 1 year. Which one of the following is not correct? So asset liability matching is important consideration in financing. Yes, we will see that assets and liabilities are matching together or not. Installment of term loans payable within 1 year is considered as current liability. Yes. If the term loan is taken and if you are paying the money in installment, means payable within 1 year, so that will be considered as current liability, because current liability is a liability that is being fulfilled within a 1 year. Repayment of term loans can be created in monthly installment. Yes, term loans can be provided back in monthly installment also. Like I'm not in a position to repay money, the lump sum amount. So I will pay in installment. So this is also given in term loans. Current ratio is the most important ratio in appraisal of term loans. Current ratio, current ratio, it measures the liquidity of a business. And we know that liquidity of a business is measured in a year. So it's a short-term obligation. Liquidity ratios, it tells about the short-term obligation of a company, not long-term obligation of a company. So we are talking about term loans. So current ratio is most important ratio in appraisal of term loan. No, it is not correct. Now, question number 23. Project loans can be given by the banks too. So project loans are for a long-term loans. So these are given by banks to whom? Only corporate and partnership firms, corporate partnership firms and societies, or any business entity. Tell me. So project loans can be given by banks. See, only is there. Now, if if you will see words only, few, okay, so these are the two words in major questions. Whenever these two words comes, that particular statement is becomes wrong statement in 99% of the cases. But still you have to check once. So not only corporates and partnership firms, but any business entity. So project loans can be given by the banks to any business entity. Option D. So just go through the statements. If the statement is included with only and few, so major times these statements these gives a negative sense, and that is why these are the incorrect statements. Next, question number 24. Which one of the following is not correct regarding financing of infrastructure project? Financing of infrastructure project. So banks are allowed to fund promoters equity. Yes, we have seen that different methods bank will use to fund the promoters equity. Okay, ab initio method, 40 to 50% method. Remember this we have done. Now, exposure norms are relaxed by RBI. So, yes, whatever exposures are there, so it is given by RBI in terms of infrastructure project, that is long-term project. Asset liability mismatch has been permitted by RBI. How? If there is mismatch between the asset and liability, then how would a company will have their obligation to pay short-term and long-term obligations? So asset and liability matching should be there, not mismatching should be there. So it has been permitted by RBI? No, this is incorrect. And infrastructure development financial corporation, these provides liquidity. So yes, these are the banks that mainly deal for the infrastructure projects and they provide liquidity support to banks as well. All right. So which one is not correct? So option C is not correct. Next, which one of the following statement is not correct for project appraisal? Not correct. So for project appraisal, if any infrastructure project, okay, any borrower visits to the bank for a loan related to infrastructure project, then in the project appraisal, what are the things the bank do the appraisal of? Examination of the technical feasibility. If a bank is providing loan to any borrower related to infrastructure project, bank will definitely see that whether this project is feasible or not. This project will give good returns to the company or not. Is this project healthy for the company or not? Then only bank will give loans, disburse loans. Yes. So this is which one of the following is not correct? It is asking, so examination of technical feasibility. It is required. The contribution of promoters forms a part of financial appraisal. Yes. How much promoters have contributed? How much shareholders have contributed? So it's a part of financial appraisal. We will see in finance that how much the shareholders have contributed. Promoter's background is a part of management. The background is to be checked. It is done by the part of the management. Capacity of promoters to arrange for additional funds. If the promoters they are arranging, they need more fund. They're arranging for additional funds for emergency period in case of contingencies. So it is a form of economic appraisal. Is it a form of economic appraisal? No, this is not a form of economic appraisal. So which of the following is not correct? So option D is the correct answer. So it's a form of management of financial appraisal, but not economic appraisal. Yes, so it actually belongs to financial appraisal or management appraisal. Economic appraisal, it focuses on the economic conditions, impact on economy, the social benefits, the movement, economic movements, the inflation, deflation, all these things are a part of economic appraisal, but not this one. If the promoters they need additional funds in case of emergency period, in case of contingencies, so it will be a part of management or financial appraisal. All right, so all the answers are provided over here. Now, question number 26. Which one of the following is not a purpose of credit monitoring? We know that we have done all the things so far. First, the loan policy of the bank is important. Okay, loan policy of the bank. Then we have seen credit appraisal, project appraisal, credit appraisal, for what purpose the credit is being asked. After credit appraisal, okay, credit disbursement. Once credit is appraised, then the credit disbursement is there. Disbursement means the credit delivery. We can say delivery also. After providing credit, the bank's work does not end over here. The bank need to monitor all the activities. So credit control and credit monitoring is also next of the activity. Credit control and credit monitoring. So not a purpose, which of the following is not a purpose of credit monitoring? So in credit monitoring, what we do, we see that if a borrower has taken loan, suppose borrower has taken loan in the name of education or in the name of infrastructure purpose. So bank will also monitor the activities, whether this particular borrower is using the money in educational purpose, whether this particular borrower is using the money in infrastructure purpose. It's not that the borrower is using the money for some other purpose, for his or her personal purpose. That is why control and monitoring is done. So in credit monitoring, what we see, we ensure that the use of funds at the borrower should be used in a good way to ensure the end use of funds. If there is any kind of deterioration, once it is detected, then the bank has to check, okay, if the security has to be checked over there, okay, in the security charge to the bank. To comply with the guidelines of RBI, this has to be done in auditing, in compliances. This all has to be done in compliances, not in credit monitoring. So it's not a part of credit monitoring. To ascertain that business continues on the projected lines, for what purpose the business has taken the loan, the business should use that loan in the same purpose only. This also we will check. But option C is not a part of credit monitoring. Now, next question number 27. Which of the following is not a tool available to the bank for credit monitoring? Not a tool available. So different tools are there that is available to the bank for credit monitoring. Which among the following is not a tool? So for examining conduct of borrower's account in credit monitoring, we see the borrower's account. Do we see or not? Yes, we check the borrower's account, the borrower financial statement, whether the company is healthy or not. Yes, we check the analysis of financial statements of the company. Yes, periodic visits is also required, personal observation, inspection. But sending regular reminders to the borrower, it is not a tool that is available for credit monitoring. Option A. So these all are the tools. All three are the tools except the first one. Next, question number 28 and 29. Which of the following is not a method of detecting wrong mention of inventory in a stock statement? So if the stocks are not properly allocated, it is not properly mentioned. So which of the following is not a method of detecting wrong mention of inventory? So in stock audit, we see whether the stocks are properly managed or not. Okay, the auditing of stocks are done. The physical verification of stocks are done. Inspection of stocks are also done for detecting the wrong mention of inventory. Cross check from the balance sheet figure. We also cross check from the value that is mentioned in the balance sheet of the whether the inventory are properly mentioned or not. But analysis of financial statements, because we are already doing this in balance sheet, so why there's a need to do in financial statement? So analyzing of financial statements is not a method to detecting wrong mention. Which of the following is not a method of detecting wrong mention of receivables in statement? Again, receivable also see. In analysis of financial statement, we see from where the finances are coming, okay, cash outflow and inflow, okay, all the application sources of funds. So that is what we check in financial statement, income and expenditure account. But these are the things that are checked in the specific balance sheet figure in receivables audit, inspection of books of account. So not a method of detecting wrong mention, again, analysis of financial statement. All right, so this is again option A. Okay, so here is the explanation that we need to find one method cannot directly detect a wrong stock shown in stock statement. So stock audit detects the wrong stock, inspection of stock also detect the wrong stock, cross check from balance sheet figure. We can also, with proper auditing of financial statements, we can cross check from the balance sheet. But methods that cannot directly detect, that is analysis of financial statements, because it tells basically the financial health of a company. Financial statement tells about the financial health of a company, the ratio analysis. Okay, it does not verify a specific thing, that is actual verification of stock. So this will be done from stock audit, inspection of stocks, and balance sheet. Next, question number 30 and question number 31. Which of the following is not a danger sign about the direction of business of the borrower? Not a danger sign means it can be taken lightly. If option A says that the devolvement of LCs, devolvement means the transfer of LCs, invocation of bank guarantees. Yes, it is a danger sign. The LCs cannot be transferred. Okay, bank will only give the guarantees when the documents are properly checked. Then delays in submission of stocks and receivable statements. See, if there is a delay in submission of stock receivable statement, then it is also a danger sign, because it will not tell you the exact financial position of your company. If checks are returned, bills are returned, that is also a danger sign. But if any Company is asking for higher limit from the bank, that is not a danger sign. The bank will analyze everything, then only the bank will sanction the limit. Then only the bank will decide the limits. So it's not a danger sign. It's just bank should be more cautious. Bank should be more cautious about this. About this. So option B. So it's not a danger sign. Rather than the bank should be more careful about this. Suppose the borrower has demanded, okay, let's take an example. Borrower has demanded 40 lakh rupees. All right. Now, this is the higher limit according to the company of that particular borrower. So, bank will first analyze that whether this borrower is in a position to repay the money back. Bank can recover their dues back. Then only bank will sanction the limit. So, it's not a danger sign. It's just bank should be more careful about it. Which of the following is not an unsatisfactory sign in conduct of the account of the borrower? Unsatisfactory sign. Not an unsatisfactory sign. If there is a delay in payment of interest in installment, yes, definitely banks, they will become unsatisfied. They want to know what is the reason why there is a delay in payment of interest amount of principal amount. So it is a unsatisfaction condition for the bank. Yes. Now, routing of transactions with some other bank. If the borrower has routed the transaction, borrower has taken consortium loan syndication from different banks. So this is also one of the problematic for the bank. Frequent overdrawings. If the borrower is overdrawings frequently, okay, the borrower is taking a lot of loan for the like working capital loan, term loan. Now, high turnover. If turnover is high, it means what? That banks they are using more and more funds for generating more and more incomes. Banks they are doing more business for making more money, more business for more revenue. So that is high turnover. So it is not an unsatisfactory sign. Rest all three are the unsatisfactory sign. All right, understood. High turnover. So high turnover is a good for the companies. So high turnover means what? The high sales the company is making. If the company will make high sales, there are more chances that company will generate more revenue, more profit. So that is a good sign for the company. Next, question number 32. Which of the following is not a purpose of credit audit? So again, credit audit. So why credit audit is important? Why we do credit audit? So to see that the borrowers are in a good condition or not. To check whether the credits that has been disbursed to the borrower or the credit that has been delivered. So either the banks they are monitoring all the activities or not. So improvement in the quality of credit portfolio so that banks they can improve their credit portfolio. Sanctioning process should be reviewed again and again whether it is healthy enough to disburse loans or not. The compliance status of large loans. So the loans which are of large value, these will be checked quarterly. Feedback on regulatory compliances. So regulatory compliances is the work of compliance department, not the credit audit. Stock inspection is also the purpose of credit audit. So which not the purpose of credit audit? Option C. Oh, okay. Wait. Just a minute. Just a minute. It is asking. Uh, wait. Just a minute. It is asking not the purpose of credit audit. So improvement in the quality of credit portfolio. Credit word is there. So it's the purpose of credit audit. Sanctioning the process of all the loan account status of checking large loans. It is the work of credit audit. Feedback on regulatory compliance. If the feedback is provided on the compliances related to credit audit, that is also, but stock inspection, it is not a part of credit audit. Credit means what? Giving loans, okay, to the borrower, to the customer. So stock inspection, it is related to the borrower's company, it is related to the customer's company. So that is why it is not a purpose of credit audit. All right. Now, purpose of appointing bank's nominee on company's board of the borrowing company is what? Why we appoint the bank nominee? What is the purpose of appointing the bank's nominee on the company's board? Generally, we appoint so that the if the bank's nominee is appointed on the company's board, so that the bank's nominee can check all the internal matters of the company, right? They can check the financial position of the company. They can take important decisions, okay, related to their bank from the company. So why the purpose? What the purpose is to appoint? So to keep a tab on the important decisions of the board. Option A. To be a part of the management? No. To guide the company for better working? No. See, purpose of appointing nominee is to take important decisions of the board. Understood? Now, so question number 34 is read the question and give me the answer. Meanwhile, I'll see your comments. So what it says, how many credit information companies have been permitted by RBI in India to function? Now, what is credit information companies? So credit information, these are those companies that provide information to the bank. Okay, what kind of information? The credit related information to the lenders, to the bank, to the financial institution, so that they can take proper decision before disbursing any kind of loan to the borrower. So right now we have how many credit information companies that are permitted by RBI? So total we have four credit information companies that the permission has given, RBI has given the permission to actually work. All right. So credit information companies are what? These are those companies that provide credit related information to the lenders, to the financial institutions, so that they can take proper decision. They can come to the conclusion. They can take informed decisions. How much credit has to be disbursed? What amount of credit? What limit should be there? And how to manage risk properly. So global credit information companies, we have Experian, Equifax, TransUnion, and in India we have four CICs. The first is CIBIL, that is full form is important, Credit Information Bureau of India Limited. So it is India's first CIC that offers credit report. So it provides the report related to credit information of the companies. Then we have Equifax Credit Information Services. So it is again, see, Equifax is a global CIC and Equifax Credit Information Services in India. So it's one of the subsidiary of Equifax that also provide the credit related information of the companies to the financial institution. Next, we have Experian India. So it provides credit reporting services, customized services for the Indian market. So credit information companies, the CIBIL Credit Information Bureau of India Limited, it was set up by State Bank of India with the association of which bank? That is HDFC. This is very, very important. So earlier there were three companies that were allowed to work as credit information companies. But now RBI has suggested that total how many CICs would be there? Total, just a minute. Yes, total we have four CICs. That is TransUnion CIBIL, Equifax, Experian, and CRIF Highmark. Okay, so CIBIL, the name of CIBIL has been changed to TransUnion CIBIL. So it has become TransUnion CIBIL. So CIBIL has now changed to TransUnion CIBIL Limited, and RBI has directed that all the credit institutions they can become member and they have to submit the reports to all the four credit information companies. Who are the four? Which are the four credit information companies? This one. Equifax 2, third is Experian, and fourth is CRIF. And one more thing that is important. So all the banks and financial institutions, they have to submit the list of SU filed, means the accounts the bank have claimed for the money, and non-SU filed accounts if the willful defaulter has done the default of 25 lakh and above. So for all such information has to be provided by the banks to the CAIIB. To whom bank will provide? To the CAIIB and credit information companies. So all the information has to be provided when the willful defaulter, when the default has been done of rupees 25 lakh and more than that. When the information has to be provided, so it has to be provided monthly. All right, for all the SU filed account means I have claimed for the money. The bank has claimed for the money. Bank has filed the account or even the bank has not filed the account. So in both the cases, the willful defaulter has conducted the default of 25 lakh and above. So all the reports have been submitted to the credit information companies on a monthly basis. So there are four different types of four credit information companies. So we have seen TransUnion, Equifax, Experian, and CRIF High Mark Credit Information Services. So henceforth, is the answer? Option D is the correct answer. Now, next question number 35. Which of the following is not a credit risk? Okay, not a credit risk. Credit risk is what? Credit risk arises. It arises when the borrower has done the default. Yes, when the borrower has not repaid the amount, both the principal as well as the interest amount. So it's the unwillingness of a customer to meet his or her commitment relating to financial transaction. Yes, when the customer has not fulfilled his or her commitment, when any kind of financial transaction took place, then that comes under credit risk. Or inability of the customer to reimburse the bank in case of invocation of a guarantee or devolvement of an LC. See, what is the devolvement of an LC? Basically, it says that it means that the customer is unable to pay the bank when the bank has to make payment on their behalf. Now, so guarantee invocation is what banks pay because the customer has failed to fulfill a promise. And letter of credit defaultment means bank has paid the supplier because customer did not pay. So LC is generated. LC is what? That is letter of credit. So it is the document that is issued by a bank. So when there is when the relation between the buyer and seller is not a trustworthy relation, in that case, the bank has to do their involvement and bank issues letter of credit. So this statement, it simply means that the customer cannot repay the bank after the bank has paid on their behalf. So yes, this will also come under the non-repayment of the money, that is credit risk. Then inability of a customer to meet his or her commitment. Again, the customer has not fulfilled his or her commitment. Yes. And loss to the bank due to fraud. So if any loss is there, the bank has suffered the loss because of the fraud conducted, because of the suspicious transactions took place, because of the misconduct. So that is not a part of a credit risk. That is a part of the operational risk. All right. That is not a part of credit risk. So option, which of the following is not, it is asking. So option D. Which of the following is an external factor that affecting credit risk? External factor means the factor which is uncontrollable. We cannot control that factor. All right. Faulty loan repayment structuring. If there is credit risk, bank can control it. Yes, this bank can see which loan is a faulty loan, and bank can also restructure it. Yes. Over concentration. If bank has given to any specific sector more loan, although the limit is there, but still the bank has given to any specific sector like 50%, 60% of the bank portfolio. So in that case, bank will try to correct their mistakes. Bank will rectify. So again, this is the internal factor. Lack of efficient recovery machinery. Again, this is also an internal factor because your machines are not working properly. But what is an external factor? That is government policy. Can you control this? If new policies are implemented, new policies are formulated by the government, and it is mandatory that all the banks, they have to follow. Can you control this? No, you cannot control this. So external factors are those factors which are uncontrollable. You cannot control them. But internal factors, you can control them well. You can manage the risk and you can take corrective actions for the same. Now, question number 37 and 38. Which one of the following is not an internal factor affecting credit risk? Okay, now it is asking not an internal factor. So it means among the four options, three would be external factor. Okay, and one would be an internal factor. Sorry, not an internal factor. Means the three options would be external factor and one would be internal factor. So which of the following is not an internal factor? See, excessive lending to cyclical industries. This is internal and this is external. Excessive lending to cyclical industries, low quality of credit appraisal and monitoring, then deficiencies in the loan policy of the bank. So all these are what? All these are the internal factors. You can manage the excessive lending. Okay, you can also do the credit appraisal again and you can monitor the activities. You can also check which loan is a deficient, which brings a deficiency in the bank. The borrower's financial statement is not healthy, the loan policy of the bank, the further documentations has to be checked. So all these are the internal factors, and one is what that is external factor. So you have to, the question was which one of the following is not an internal factor. So the policies again of other countries, this is an external factor. So three options would be internal factor and one would be external factor. Now, next, which one of the following is not a macro level action for mitigation of credit risk? For reducing the credit risk, two types of actions has to be taken. One is macro level, another one is micro level. Now, macro level is what that is it it basically it like micro and macro means what? Micro means for small part, we can say for any specific activity, and macro means for overall. So, what are the steps that are taken to reduce the credit risk? So which one of the following is not a macro level action? You have to find which one of the following is not that type of action which is used for overall scenario. So if you are reviewing the exposure norms for single or group borrowers, so again it is for any specific activity for single borrower or for a group of borrower, not for the entire the system, not for the entire portfolio. So you are checking it individually. So this is a micro part. Reviews of norms, fixing internal limits for aggregate commitments. Again, it is for the specific word is there. Now, specific comes under micro sector. Yes, so it is not a macro. Periodic review of total credit based on the quality parameters. So you have to review the credit portfolio on based on the different parameters that is decided. Again, it is more specific. If you will see that standards of credit appraisal, so you are improving the appraisal of entire bank portfolio, entire credit proposal. So this is more a macro part as compared to the micro. So option B is the correct answer. Done. All right. Next, question number 39. Which of the following is not a micro level action for mitigation of credit risk? Okay, so here it was asked not a macro level. Now you have to find not a micro level. Again, improving sanction and delivering process. So it is for the entire nation. It is for the entire branches and banks. Yes, for entire companies. Okay, how to deliver the process, how to disburse the credit. Obtention of collateral security. So it is checked that which borrowers are giving which kind of security. Secured loans. Banks are offering secured loans. Banks are offering unsecured loans. Again, monitoring and review of individual proposals, categories of proposal. Again, uh, monitoring the fact and reviewing the individual proposals and categories of proposals. But if you will see periodical reviews of the exposure limit for business industry segment, exposure limit for the entire business and entire industry. So it is not a micro level part. It is what? It is a macro level action. So all other three are the micro level. If you are improving the credit sanctioning process, delivering process of the companies, yes, it's a micro. If you are seeing what type of loan to offer, secured loans, unsecured, it's a micro. If you are reviewing the individual proposals, means specific individual proposal, then it's a micro. But exposure limits of each and every portfolio of each and every sector, that comes under macro part. I hope this is clear to you. Next, question number 40. Which of the following statement is not true regarding credit derivative products? All right, so credit derivative products are what? See, if bank faces any kind of issue like default issue, the customer is not in a position to repay the amount, the inability of the customer to repay their short-term and long-term obligation. So because when the banks they get early warning signals, so they become more careful. Okay, so they try to take the benefits. Okay, they try to mitigate their risk. Now, so which one is not true in credit derivatives products? So we have credit derivative products like we have Okay, swaps we have, options we have. So these are what? These are the derivative products through which one can mitigate their risk. So credit swaps are there. So what are the things that is not true regarding credit derivatives product? So these are used to hedge credit risk to the bank. Yes. So credit risk to the bank is what? That is, it helps to mitigate the credit risk. Yes, this is correct. Protection bar is the lending bank. Okay, because I want to mitigate my risk. So I will buy the protection. Okay, I will buy the protection. So who am I? I'm a protection buyer. So here the bank, the lending institution becomes the protection buyer. The one who sells protection, that becomes the protection seller. It could be any other organization. But credit asset is transferred in case of derivatives. So no. In this case, the credit asset is not transferred when the derivatives are there because one is giving you, one is selling there, one is selling the protection, and the one is buying the protection. So you cannot transfer to anyone else. So option D is the correct answer. All right, understood. Now, question number 41. Credit rating is a system of what? So credit rating, it is a system of measuring risk. That in this, with credit rating, one can measure the risk of the company. Internal rating means what? Internal rating means that what you are rating. You are rating the borrower's credit worthiness. So you are rating the project, you are rating the promoters, risk of internal use, or rating borrower, the facility, their company. So internal rating is rating borrower. Next, question number 43 and 44. So for external credit rating, banks will depend upon what? Banks will depend upon rating agencies, the experienced staff of the bank, bank consultant, or none of the above. So for external credit rating, so banks will rely on the credit rating agencies, that is CR. And the CRILIC has been set up by CRILIC. So if the borrower has taken a loan for 5 crore or more than that, then the bank will provide all type of information to CRILIC. And this is set by RBI according to the RBI guidelines. So CRILIC is set by whom? CRILIC is set by RBI guidelines. So it's a central repository of information on large credits. When the borrower has taken large credits worth rupees 5 crore or more than that, then the banks will provide reporting the information to CRILIC. All right, and it is set up by RBI. So full form of CRILIC is very, very important. Now, so these are all the answers from 34 to 44. Now, next. Question number 46. The purpose of restructuring of loans and advances is why we restructure any loan and advances. So banks, they provide, see, if default has done, the customer has not repaid the amount, bank is unable to recover their dues. So bank will provide three courses of action. What is first is rectification. Second is restructuring or rehabilitation. And third is recovery. So these are provided so that banks can recover their dues. So restructuring is what? It is given for loans and advances so that bank can restructure their their operations. Bank can get companies can restructure their operations. Companies can get more time. Banks will give them more elongation of time period, or the companies will get more money from banks so that they can do restructuring. So it helps the companies to make the operations of the enterprise viable again, means so that they can work again, they can operate again. So option A. Now next, banks enter into compromise with the borrowers in case. When bank will compromise with the borrowers? When borrower has abundant money with him than the security value. So this is not ethical. If borrower is having more money than the security value, then bank will not going to compromise. Why? Because it is unethical for the bank. Selling of security involves legal process. So selling of security, yes, it involves legal process only in the case when the default has been done. And default has been done when bank has issued Secured loans, only in that case, bank can sell the security, otherwise not. The present value of compromise offer, if it is more than present value of compromise offer, if it is more than present value of realizable. Okay, we are talking about present value. It means we are considering time value of money. We are considering discounting. That is why we have talked about the present value. So present value of the present value of compromise offer means the settlement now. See, when a borrower cannot repay, the bank has two options. Compromise offer, that is settle now, or recovery through securities. So borrower says, I cannot pay full amount, but I will pay this much amount to close the loan. So bank will calculate the present value. Is the bank is getting the benefit or not? What is the present value of all the future cash flows that bank will going to receive from the borrower in future? So bank will calculate present value of this amount. Basically, it's today value. Or the second option is recovery is done through the securities. The legal route is there. Bank will sell the securities. So bank seizes and sells collateral like property, assets. This will take time also. This will take a lot of years also. And it involves extra cost also like legal cost, registration cost. So bank will calculate expected money from the sale minus whatever the cost is there, whatever the delay is there. Then the bank will convert it into present value. So it will take a lot of time and it will take a lot of cost. So that is why bank says that, okay, let's go for the compromise offer. Because because of time value of money received today that is more valuable than the same money you will going to receive in future. Suppose you are receiving 1000 rupees now. And from that 1000 rupees, you can buy multiple things. Okay. Now tell me, after 10 years, if I will give you the same 1000 rupees, can you buy the same quantity of products worth rupees 1000 rupees after a year? No. Why? Because of inflated prices. The value of money has went down. So here also similarly, the bank will see that the money that we are receiving today is more valuable. So bank will choose the compromise and bank will avoid the long method, the legal recovery. So here, what bank will go? The present value of compromise offer. If it is more than the present value of realizable, that is good option for the bank. All right. So present value of compromise offer should be more than present value of realizable value of security. So correct answer is option C. Now, see, all these are the you can say explanation part. So after downloading the PDF, go through all these parts. Okay, read it once. Next, question number 48. When can a bank initiate a corporate insolvency resolution process? That is CIRP process. When bank will initiate this in relation to a defaulting company is known as corporate debtor. When the bank will initiate CIRP, when bank has suffered the recovery dues, when there is actual default conduct done by the borrower. So on determination of default by NCLT, see, in the action will be taken, the actual process, okay, it will start after NCLT approves. But bank will initiate when there is default done. So occurrence of default. Not when the bank has classified the account as NPA or when the debtor becomes negative. When the default took place, then CIRP has been initiated. Once the bank has provided the application, okay, bank has given the application against the corporate debtor. NCLT feels that, okay, all the things are, everything we have checked. Now we can start the process. Then only the process will be started. Next. Can an interim resolution professional act as resolution professional? That is, question says that can IRP perform as RP? Yes, IRP can perform as RP. When IRP can perform as RP? Only in that case when the voting share of the creditors should not be less than 66%. It means it can be appointed, yes, if appointed by the committee of creditors. So committee of creditors are formed. They take the actual judgment of the company that when to start the CIRP process, how to make resolution plan, and the IRP will act as resolution professional only in the case when the voting share of the creditors should not be less than 66%. So at least 66% of the committee of creditors, if they are saying yes, the IRP can act as RP for further processing, for further proceedings, then only it is possible. So option Okay, there would be one confusion between option A and option B. Option B, you will if you will read the option, it seems that it is also the same. See, yes, if appointed by committee of creditors with votes of not less than 66% of the number of creditors. But there is one catch in these two statements. Here it says voting share. Here it says the number of creditors. No, not number of creditors. Means voting share means if I'm having more amount, okay, I have to recover more amount, so that would be more voting share will be for mine. Like suppose 10 creditors are there. Okay, among the 10 creditors, the number 5 creditor is having a lot of due. Means the creditor is having 2 crore dues. Rest of the creditors, they are having 1.5, 1.2, 1.1, 1.8. But creditor 5, number 5 creditor is having 2 crore. So this would be the voting share. So the highest due is there, so highest voting share is. Alright, so that is why voting share is taken, not number of creditors. So that is why option A is the correct answer. Now next, question number 50. An application against the decision of the liquidator rejecting the claim of a creditor may be made. Okay, what does the question say? Question, okay, it's difficult to understand. See, question says that an application against the decision of the liquidator rejecting the claim means if a liquidator rejects a creditor's claim. So where can the creditor appeal against that decision? So if the liquidator is not accepting, liquidator is rejecting the creditor's claim, so creditor has the right that they can appeal against that decision. Now, where that creditor will go to appeal? Insolvency Bankruptcy Court of India, NCLT, Committee of Creditors, or the Debt Recovery Tribunal. Tell me. So the creditor can claim for NCLT, National Company, NCLT, National Company Law Tribunal. An application of bankruptcy can be withdrawn with the voting percentage of, okay, suppose like when the public announcement is there in, see, if you are studying this particular chapter for the first time, it will be difficult for you to understand. Okay, I hope you all have studied because I'm explaining this question in between. All right, when the actual, see, there are many creditors. Okay, when public announcement is there, so all the creditors they claim, okay, they submit their proofs that yes, this company has taken debt from me in this year at this rate. So when the creditors, the operational and financial creditors, when they have claimed, and if any of the creditor wants to withdraw from the case, so in that case, what is the voting percentage? How that creditor will going to withdraw from the case? If the voting percentage would be 90% of the committee of creditors. If 90% of the committee of creditors will say yes, you can withdraw from this case, then only that particular creditor can withdraw. Otherwise, not. So 90% voting is must. Okay, and this question repeats a lot in the exam in any of the way, whether in the form of case study, whether in the form of fill in the blanks, whether in the form of direct MCQs. This question comes a lot in exam. 90% of the committee of credit. Next, any person aggrieved by the order of the NCLT, they can make appeal to where? See, if the creditors, they are not satisfied with the decisions with the NCLT, so whatever decisions, whatever resolution plan the NCLT has made, if the bank or any financial institution, creditors are who? Who are the creditors? The banks or financial institutions. If banks and financial institutions, they are not happy with the decisions what the NCLT has taken, so they can go to the upper level. Like we have a district court, we have a high court, then we have Supreme Court. So similar to this, if one is not happy with the decisions of the NCLT, then they can appeal to NCLT Law Appellate Tribunal. They can make appeal to NCLAT. Option D. So the term of the office, question number 53, the term of the office of chairperson of Insolvency and Bankruptcy Board of India, IBBI, is what? Like banks, they have the regulator RBI. RBI is the apex body of the bank, regulator of the bank. Similarly, the Insolvency and Bankruptcy Code, it has its own regulator, that is IBBI. So IBBI is the regulator of IBC. Now, what is the full form of IBBI? Insolvency and Bankruptcy Board of India. So what is the term of the office of chairperson? So the term of the office of the chairperson is 5 years or till she attains the age of 65. If the person has worked for 5 years or if the person has achieved at the age of 65, whichever is earlier, that is option A. Next, question number 54. So who makes a regulation to be adopted by insolvency professional? Who makes regulation means who is the regulatory body for the insolvency and bankruptcy code. So just now I have told you that IBBI is the regulatory body of insolvency and bankruptcy code 2016. IBC 2016. Insolvency and Bankruptcy Board of India, IBBI. Option C. Now, first question is Module D is all about what? Compliances. So questions will be related to that. So possibility of regulatory action of closing down businesses dash risk. So we have different types of risk. All right. Now, if because of the regulatory action means the banks or the branches, they have not followed the regulations of the RBI or any other regulatory body, then the possibility of the chance is that the regulatory action will be taken and that action would be the closing down the business. So what type of risk is included in this? So annihilation, legal, operational or regulatory. So that is annihilation risk. Option A. So annihilation risk is the risk where is the complete loss to a bank when its operations are closed down. Why? Because the bank has not followed the guidelines, rules and regulations of RBI. Legal is the when legal actions or the when laws are not followed. Operational risk arises due to people, process and system. And regulatory, it arises from the regulatory, that is RBI or any other regulatory body like SBI, IRDA, PFRDA. So when these regulatory bodies, they have made certain guidelines and regulations and the branches or the banks have not followed. All right, so option A is the correct answer for question number 1. Now, next question. Which of the following is a statutory regulation? Statutory. Statutory means what? Anything that is made by law, structured by law. So which comes under statutory regulation? See, if you don't know this question, then from the elimination method also you can easily find the answer to this question. First is, it says the statutory regulation means the law, the litigations, all these things. So guidelines from SEBI, again the guidelines, rules and regulations from RBI, guidelines from IRDA. But statutory, that is structured by law, that is made by law, litigations are there. So it is legislation under RBI Act. Option number C. Now, the scope of compliance function does include one of the following. The scope of compliance function. Compliance function means what? That is whether the compliances are followed, whether the guidelines, rules, regulations are followed or not. Yes, that is what the scope of compliance function. So it includes which one of the following? Code of conduct issued by ICWA, listing agreement, internal guidelines, regulatory compliance. So it includes what? Code of conduct issued by ICWA. Now, why not others? See, code of conduct is what? In compliance function, see, it is mandatory that every branches, every company, whether it is any firm, they have to follow the compliances, they have to follow the guidelines, but with ethics only. So code of conduct, that is the ethical guidelines are to be followed. So code of conduct issued by ICWA. Now, listing, why listing agreements not? Listing agreements is what? It is the agreement that has to be signed between any entity, and what kind of which entity? Those entity who want to list their securities, in the stock exchange. So entity plus stock exchange both have to sign one agreement, and that agreement is known as the listing agreement. Now, internal guidelines, so compliances are not only for internal guidelines, it is for external as well. So external guidelines are also followed when maintaining compliance. All right, so option A is the correct answer. Now, what is the tenure for appointment of CCO as per RBI in a bank should be minimum? So the topic Chief Compliance Officer is very important topic. You will every time you will see 2 to 3 questions from CCO in all the shift, in all the attempts. So that is why this particular topic is very, very important. So what is the tenure for appointment of CCO? So any CCO can be appointed for a minimum period of 3 years, means not less than 3 years. So tenure for appointment of CCO is 3 years. That is the minimum. Okay, minimum tenure is 3 years. If it would be written maximum, so 3 years would not be the answer. So you have to remember the minimum word also. Now, overall responsibility for overseeing the effective management of the bank's compliance function and risk is of. Now, what is the responsibility for seeing the entire management's effectiveness and efficiency related to the compliance function in the bank? Who sees basically, who oversee all the activities of the compliance function and compliance risk? Board of Directors, Audit Committee Board, Chief Compliance Officers, or CEO? See, here it says oversee the effective management of the bank's compliance function also and the compliance risk also. Now, CCO will see only the compliances function. Audit committee of the board is what? That will see the internal audit, that will see the compliances related to the audit. Bank's board of directors will see the compliance function and compliance risk. All right. So roles and responsibilities of CCO is what? That is the tenure of the appointment of CCO is CCO shall be appointed for a minimum fixed tenure of not less than 3 years. And any CCO can be transferred also, can be removed also before the completion of its tenure, only in certain cases, not in all the cases. Like any CCO is appointed in the year 2021. So in the year 2022, 23 and 24, till this years they have to work the CCO. If any CCO has been transferred before the time period, then it can happen, but only in exceptional cases. And that too, prior approval is necessary. All right. Okay. So we have all the answers. A, C, A, A. Now, provision coverage ratio refers to the ratio of, that is PCR. So how much provisions bank make from their assets. So what is the chances of that their assets will generate into NPA? So to cover, okay, to make the provisions, okay, to cover the abnormal losses, the PCR ratio is maintained. So what is the formula for this? So PCR, provision coverage ratio, is what? That is provision for NPA upon gross NPA. Okay, so option A is the correct answer. Provision for NPA to gross non-performing assets. That is provisioning coverage ratio, PCR. So provisioning coverage ratio is what? Banks should build up provisioning buffers for absorbing losses in a downturn. So how much loss bank can suffer to absorb those losses? The PCR is maintained. The provisioning coverage ratio is maintained, and this is maintained in order to see that how much extra losses bank can manage it from their profits. That the bank has to keep aside to cover their losses. See, if the bank has made the profit, then only bank will keep the money aside. How bank will keep the money aside? When bank has made enough profits, then only the money can be kept aside for covering all the losses if in future bank can make. So keeping money aside to cover all the loan losses, that is PCR. Now question number 7 and question number 8. Seven says that all unreconciled credit entries in nostro accounts which are outstanding for more than how many years, and that will be transferred into a new account that is known as the blocked account, means the money has been blocked. Now, first of all, it is necessary that you should know what is different accounts. So we have nostro accounts, we have loro accounts, we have vostro accounts. So nostro account is what? See, these are the accounts that are used in international transactions. First is nostro account, means our money is with you. Means suppose Indian bank is there and USA bank is there. Let's take example. Our money is with you means Indian money is kept under the USA account. That is nostro account. Vostro account means the USA money is under the Indian bank account. That is vostro. And Indian account and USA bank, okay, Indian company account and USA company account is in the some other company. So that is their money has been kept in some other's account. That is loro account. So our money deposit at your bank, that is nostro. Your money is deposited at our bank, that is vostro account. So account held by any foreign bank in our country, that is in domestic currency at our bank, that is vostro account. Our money is held in the foreign currency in any other foreign country's bank, that is nostro account. So all the unreconciled credit entries which are outstanding for more than all the entries, all the transactions which are outstanding for more than 3 years, that will be transferred all the amount to where? To the blocked account, and it will be shown under liabilities. So option B. Now, as per extent guidelines, commercial banks excluding LABs and RABs shall transfer not less than dash percentage of the net profit before appropriations to the statutory reserve. See, this is just the cramming portion, so not less than it is 25%. Option A. Now, question number 9. Which is incorrect about lines of defense against the shocks? Which is incorrect? See, organizations, they follow three lines of defense, okay, model. This is basically followed to manage the risk, to assess risk, and to mitigate risk. So first line is what? First line is the risk takers. First lines of defense is risk takers, that is business. So these are employees who do daily work and they take risk. Yes. Second, it is given that second line of defense is given risk oversight. So risk oversight means what? That the risk management and compliance teams, they monitor and guide all the risk. This is also correct. Third line is the internal audit. So internal audit is what? They check everything independently to ensure that whether rules are followed or not. But option D, it says that the supervisor as regulator is the fourth line of defense. So option D is incorrect. The model, it officially has only three lines of defense. A supervisor regulator is outside the organization, not the part of any internal defense. So regulator is what? It is outside, not a part of internal defense. So calling it the fourth line of defense is not correct. Only three lines exist inside a company, and regulators are what? These are external. So they are not counted as a line of defense. Only three things are included over here. So incorrect about lines of defense is what? That is supervisor as regulator is the fourth lines of defense. It is incorrect. All right, all the answers are given. Now, question number 10 and 11. At the functional department level, the duties of compliance officer is carried out by. So functional department level, all the duties of compliance officer, it is carried out by the officer who is at the senior post, okay, designated in that department. So the senior officer designated in the department. The frontline unit in compliance hierarchy is frontline unit and compliance hierarchy. See, compliance hierarchy is what, see, if any kind of non-compliance is done, it is done from the part of the branch only. So branches are the first thing that maintains any kind of non-compliances, and that then they these have to be reported to RONZO, then FGMO, then risk officer, and so on. So frontline unit and compliance hierarchy is what? That is the branch. So if any kind of non-compliances is done, or if any kind of things have been identified, so first the branches are the one from where the things have been identified. If non-compliances are done, or the rules are not followed, or the breaches are done, so it will start from the branches only. That is why option A is the correct answer. Okay, so how should breaches be reported? So first the breaches, any breaches will be done from branch. It will be reported to RONZO, regional and zonal office. If a branch finds non-compliance, it must report in a structured format. Then RONZO, see, branches to RONZO, then RONZO will provide CD, CO, compliance department at central office. Then one you can say this, yes, one uh, file will also be provided to whom? To the risk officer. Okay, one copy will be given to the risk officer for the reporting of all the breaches. Now, risk officer, that is RONZO, will also provide to FGMO, Field General Manager Office. RONZO will provide, the risk officer will provide all the breaches to the further head, and any other breaches can be reported to the RONZO officials. They will also have to report, they will also have to directly observe. So branches will report to RONZO, RONZO to compliance department at CO, and to FGMO also. RONZO will provide one copy to the risk officer, and RONZO should give copy to the risk officer as well. So these are the hierarchy in which the breaches are reported. So that is option A is correct answer. Now question number 12. At the branch level, the most important hurdle in being compliant is what? At the branch level. Most important hurdle means what? What is the meaning of hurdle? Means the disturbances. In being compliant is what? See, in the branch level, because many people are, they are indulged in the same type of activities. So if the same type of activities are there, so there are more chances that if one person is doing multiple work, okay, multiple tasks, then conflict of interest may arise. So that person, that particular department has to follow that their respective compliances. So most important hurdle is what? That is being conflict of interest. So it arises when the same activity is conducted between different departments. Now, question number 13 and 14. Two questions are there. Which one of the following is not a means of identifying compliance issue in a product or process? See, if you will see, the compliance issues are found in which? In product or process. Now, which of the following is not a mean to identify that? Means not, it is not related to the product or process. Regulatory guidelines, law and statutes, okay, characteristics of the product or process, system and information security. So not a means of identifying compliance issue in product in, so regulatory guidelines are there. Okay, it, with this one can identify the compliance issues. With law one can identify the compliance issues. But characteristics of product or process, it does not help in identifying any kind of issues related to product and services. So characteristics are what? These are the features. So how features will help anyone to identify the compliance issue, whether that product is having any kind of compliance issue or not? So option C. Which one of the following is not the basis for identifying the level of compliance risk in each business line? Now, how to identify the level of compliance risk? Different ways are there. Which one of the following is not that factor which helps to identify the level of compliance risk in product, process, and business line? So compliance risk or compliance issues arises from where? When regulatory focus is there, customer service aspect and control aspect. When the regulations are not followed, then one can check that yes, the compliance risk are there. See, if you're not following the rules and regulations guidelines, then definitely risk will arise. And if risk arises, then the compliance risk, the issues will going to arise. Nature of activity, whether inherently high risk in nature. So different types of compliance risk is there: inherent risk, annihilation risk, residual risk. So it is the basis for identifying the compliance risk. Bank's exposure to it means how much bank has given loan to different sectors. If concentration is more in any sector, then the risk of that particular sector is very high. And with that, concentration risk increases. But laws and statute, this is not any kind of basis for identifying the level of compliance risk. Level of compliance risk will be identified from only these three. It was asking which is not the basis for identifying, that is law and statute. Yes, law is important to follow. If laws are followed, then compliances are followed. But for identifying the level of compliance risk, laws and statutes are not included in this. So option D is the correct answer. Now, question number 15. The probability of loss that remains to system that store, process, or transmit information after security measures or control have been implemented is called dash risk. See, probability of loss means when you have used everything, means when you have used a control measures, still there is probability of loss that the system will not going to work properly, that the storage capacity is not, the data storage is not good, process is not good, delayed process is there, information is not being transmitting properly, the security measures are very slow, cyber threats are there. So all these are the part of which kind of risk. So all these are related to operational risk. All right. Wait, just a minute. Okay, what does the question says? The probability of loss that remains to a system that store, process, transmit information after security measures or controls have been implemented. Okay, see, I misread the question. See, what the question says that even if you are using a lot of control measures, suppose let's take an example. You know that your system is not working properly. Your system is having obsolete technology. Okay, your system is not properly updated. The hardwares are not properly working. You know that your system is not healthy. So what you will use in this case? You will use updated technology. Okay, you will use new softwares for that, new hardwares for that. But still, there are chances that all type of risk will not be completely eliminated. Still, there will be some type of risk that will be left in your system. And that leftover risk, that left part is known as what? That is known as residual risk. See, question says the probability of loss that remains to the system. Remains means that is left to the system that store, process, or transmit information after you have used security measures, you have used control measures. Still, there is some part of the risk that is left to the system, and that leftover risk is known as what? Residual risk. So option A is the correct answer. Okay. So option A, that is residual risk. Residual risk means the leftover risk. Now, next question number 16. The possibility that banks may incur losses due to movement in interest rate, foreign currency exchange rate, stock prices, and other market related indicators are called dash risk. See, from this question, it is very clear that interest risk is there, due to the movement. And what type of movement is there? Fluctuations are there. Fluctuations, they happen in market. Market movement means demand and supply. And with the movement of demand and supply, the interest rate will change, foreign currency exchange rate will fluctuate, and this will increase which kind of risk? This will increase the market risk. All right. Credit risk is what? Credit risk is the risk that is done on behalf of the borrower. When borrower has done the default, borrower is not in a position to repay the principal plus interest amount to the bank, then credit risk arises. System risk is when your IT system is not supporting, when your software is not supporting, when your system is very slow, very delayed process is there. Liquidity risk arises when there is liquidity short-term obligation is not fulfilled, unable to fulfill the short-term obligation. That when the cash, when the liquid assets are not converted into cash quickly, then liquidity risk arises. All right, this question is clear to you. Now, 17 and 18. Which of the following is not a market risk? So in market risk, just now we have studied movement in interest rate, it's a part of market risk. Foreign currency exchange rate, part of market risk. Stock prices movement, see, everywhere the movement is there, that is market risk. But if there is sudden withdrawal of large chunks of deposit, so it is what? That is liquidity risk. All right, so not a market risk, option D. Which one of the following is not an operational risk? Customer transaction errors, it arises due to the when the operation is when the companies or banks operation is not done properly, transactions are not healthy. Collection of fake currency at the counter, when the fake currency is being collected by the cashier at the counter, that is also operational risk. Okay, wrong posting of entry due to computer malfunctioning, that is when computer is not working properly, computer with the errors done by the computer, then operational risk arises. But unethical conduct, it's not a part of operational risk. Option B. All the answers are given. Now, question number 19 and 20. Which of the following is not a part of GRC concept? So what is the full form of GRC? Governance, risk, and compliances. Now, which one is not a part? So governance is a part, risk is a part, compliance is a part, but regulation is not a part. Now, what is governance, risk, and compliance? See, governance, see, risk, we all know what is risk. Things that are not creating the positive impact to the firm, to the bank, to the institution, and that is uncertainties are there. So all this will bring the risk. Yes. Now governance and compliances are what? See, sometimes it seems that the governance and compliances, these are the same words. They are used just interchangeable. No, the difference between governance and compliance is governance, it includes the policies. See, in spoken language, we say the compliances is all about the rules, regulation, guidelines, policies. But in fact, governance is what? These are the frameworks, okay, that company or any institution or any bank frames so that they can achieve their goals. And compliances is what? That is the certain laws, the regulations that organization has to follow. If any law has been made, the organization, the system has to abide by these laws, has to follow these laws. And these are the laws. Actual laws are these. And compliances is to follow the laws. Risk is identifying relevant risk that could harm the business and how you mitigate them, how you assess them, how you monitor them. That is what the risk management process is. So governance and compliance difference is what? Governance is what? It is the framework for decision making, and compliance means how one is following the laws, how one is following the regulations that is made by the RBI or the SEBI or IRDA. Governance, it focuses on long-term goals. It is the framework. It is what? It is a framework that is made for each every one of them. Values, ethical leadership, and compliance is what? All the internal and external rules are followed. Meeting all the external and internal rules. Who is responsible for governance? The top managers are responsible, like board of directors are responsible. Senior management are responsible, top managers are responsible. But in compliance, the compliance officers are responsible, the legal teams are responsible. Nature, it is voluntary and strategic. It is mandatory, means the compliances have to be followed. It is necessary. All right, so that is why B regulation. Which of the following is most important in compliance policy? So in compliance policy, what is the first thing that is important? See, if any policy is made, so first it is expected that if your top manager is following that policy, then only the other people will follow. Yes, like in your bank, if any internal rules are there, first it is allowed. If your manager is not following those rules, how the manager is expecting you to follow that rules, right? So that is why it is important when anything is made, when any policies are made, any plans are made. So it is important that the first manager, the top manager has to follow those things. So most important in compliance policy is what? That is shown at the top. So the top manager, the people who are at the senior post, senior manager, they have to follow the policy well. Then only they can expect from their people, from their other employees to follow the same. Which of the following is not a part of whistleblower policy? So whistleblower policy is what? It's a policy in which if any person has seen any kind of misconduct, unethical activities are being conducted in the company, so it's a responsibility of the whistleblower to speak all those things, to communicate all the things that are happening in the company, in the bank to the senior manager. So not a part of whistleblower policy. Whistleblower is a part. A wrongful or unethical practice is a part. Authority is a part. Authority is given to whistleblower, but structure is not any part. Oversight role, the process by which companies manage and mitigate business risk is a part of. Just a minute. Yes. Oversight role, the process by which companies manage and mitigate business risk. So oversight role is given in where? That is in governance. The framework is created. The process companies manage and they mitigate business risk. So it's a part of governance. Okay, see, if company manage and mitigate business risk, so that would be a part of risk management, but oversight role is also written over here. Oversight role, the process by which companies manage the oversight role and mitigate business risk. So it's a part of governance. Both are included in governance, but only managing risk are included in risk management. So in risk elements, 4 risk elements are there. How to learn? I, am, am. These are the ways to learn the 4 risk element. Now, I stands for identification, A stands for assessment, M stands for mitigation, and last M stands for monitoring of the activities. So these are the 4 risk elements. Identification, I, am, M. Identification, assessment, mitigation, and monitoring. Question number 23. The whistleblower policy preamble contains the following. Which of the items should be the most important? See, in whistleblower policy, what is said that the anonymity of the informant will be maintained, the authenticity of the information will be confirmed, and there will be no reprisal for reporting the information. Appropriate and disciplinary action will be taken after investigation on confirmation of the information, none of the above. So whistleblower policy, what it says that if any person has informed you about any wrongdoing of the business, any misconduct of the business, any type of fraud that is happening in the business, so you have to take actions quickly. How you have to take action? First, you have to keep the whistleblower, okay, anonymous. That is, you are not allowed to disclose the name of the whistleblower. Anonymity of the informant has to be maintained. The authenticity of the information will be confirmed and there will be no reprisal for reporting. No. If the information, if it is authentic or not authentic, still you have to take action. You have to see whether that is 100% sure or not. So once it is confirmed, you have to take action for that. You have to report the information. It says no reprisal, no reporting is there. So it is wrong. Appropriate and disciplinary action will be taken after investigation. So appropriate and disciplinary action will be taken once everything is confirmed on confirmation of the information. And none of the above. So option A is the most suitable statement. Okay, so appropriate action is to be taken if it is not confirmed, but disciplinary action is to be taken once it is confirmed. All right, now question number 24, the questions from fraud, very easy questions. So fraud is what? A thing that is intentionally doing. So it may be actual or attempted even. Option C, that is the fraud. Vigilance angle may be discernible when a person, discernible means how vigilance angle may be identified when a person is what? Seems to have complied with unauthorized or unlawful oral instructions without bringing them to the notice, the competent authority, exceeding his powers or his actions, which is not justifiable, abusing or misused his official position to benefit himself or any one of the above. So what is vigilance angle may be identified when a person is what? See, vigilance angle means what? It means there's a chance of wrongdoing, misuse of power or misconduct. So first it says that if the orders are followed, okay, following wrong orders silently without saying a single word. So if a person follows illegal or unauthorized instructions from seniors and does not report it, so this is wrong behavior. Then misusing the power is also wrong behavior. If someone uses more power than allowed, it does not help the bank. This is very suspicious. Or if any kind of activities are conducted that is suspicious, transactions are held. In that also, if you know very well that this transaction is illegal or suspicious, still you are not taking any kind of action. So it means you are misusing your power. And using position for your personal benefit. If a person takes advantage of their job for themselves or for others, so this is clearly misconduct. So that is why even one of these actions is enough to create a vigilance issue. So the correct answer is any one of the above. If any of the option is being seen, then that will be considered as a vigilance angle. So any one of the above. Now vigilance is what? It is a deterrent to growth. It is a part and parcel of an organization. Punitive activity is the responsibility of vigilance. So it is what? It is it is a part and parcel of an organization means what? Like, see, vigilance means what? Vigilance means being alert to prevent any kind of wrong activities like fraud, corruption, or misuse of power. So it is deterrent to growth means what? So vigilance does not stop the growth of the company. It actually helps in safe and honest growth. It is a part and parcel of the organization means vigilance. It is necessary in every organization to keep things fair, transparent, and everything should be very transparent. No opaqueness is there. It is a punitive activity. Punitive activity. So vigilance is what? It is a preventive, not a punishable activity, not just punishment. So punishment is only a small part, but you have to be preventive. You have to take preventive actions against that. And it is the responsibility of vigilance. So vigilance is everyone's responsibility, not only one person's responsibility, not just the vigilance department responsibility, but everyone's responsibility. All right. So answer is what? It is a part and parcel uh, of an organization. That is, it is necessary in every organization, keeping all the things safe and transparent. Option B. All right, understood. Now, next question. Question number 7. Four statements are given to you. Statement 1, what it says that, see, now the questions is from NBFCs, role and responsibilities of CCOO in NBFC. So NBFC can finance IPO subscription for borrowers up to 1 crore. Yes. If any borrower, if any customer wants money for raising money through IPO, so NBFC will finance only up to 1 crore one borrower. So NBFC can provide finance to that borrower up to 1 crore to one borrower only. For what purpose? For financing for IPO subscription. Correct. RBI permits NBFC to set higher limits if approved by their board. RBI permits NBFC to set the higher limits if approved by their board. See, if any NBFC is having high risk, that NBFC will be kept under different layers. Like if base layer NBFC is having high risk now, then this NBFC will be transferred to the next layer. So it is not approved by their board. If the features, if the transactions, if the risk level is high, then it will be kept. Then it will be moved to the next layer. 1 crore limit act as regulatory ceiling. Yes, this is the ceiling. This is the maximum limit, not minimum limit. But NBFC may set lower internal limits. If NBFC want, they can reduce from 1 crore to less than that, but not more than 1 crore. This is correct. This restriction is part of RBI's prudential guidelines and the scale-based regulation framework. Yes, this restriction is a part of prudential guidelines. So statement 1, 3 and 4 are correct. Option A. Next, which of the following is an example of an NBFC? So NBFC, they work just like bank, but they do not have the license to operate like banks. They have the license. So HDFC, it's a bank. SBI is a bank. ICICI is a bank, as you can see the name. But Bajaj Finance is the non-banking financial companies or non-banking financial corporations. Which of the following is a characteristics of NBFC? So do NBFCs, they issue check drawn on themselves? No. They accept demand deposits? No. They provide banking and financial services without being a bank? Yes. Without having a bank license, they still provide most of the banking and financial services to mainly to small sectors, to MSME sectors, for financial development, for infrastructure sectors, different sectors. So option C is the correct answer.